show provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This morning, after, quote, hard talk, some of you are, quote, very happy as EU leaders shift to, quote, consensus support. There's a lot of quoting going on. The gentleman from Hungary called out the gentleman from the Netherlands for so-called communist tactics. Monday markets, well, they drift. We're watching bonds. Volatility is less volatile. And the fifth time's a charm this morning. McConnell of Kentucky and the GOP, they visit the White House. The president wants virus testing cut. He wants it for a new FBI headquarters. Good morning, everyone. This is Bloomberg Surveillance from our world headquarters in New York. I'm Tom Keene. Francine Lacroix back in London as well. Francine, it's almost dueling stimuluses this morning. We'll get to Washington in a moment, but really we don't have an agreement in Brussels, do we?
No, we don't have an agreement, Tom, but it's day 4 of this really marathon and pretty brutal negotiating summit. And I think we all went to bed last night, so it would have been, mid-afternoon in New York time with the thought that actually, it's almost difficult for these EU leaders to get along and to find a path forward. And overnight, there's hope, which is why euro is rising, spreads between Italian and German bonds is actually narrowing. So there is hope in the market that they will have an agreement. Resumed talks will begin at 4 p.m. London time. That
sounds like you're talking about the White House today. Republicans meeting at the White House. I really can't say enough, folks, about the cacophony in Washington as everyone returns from listening to their constituents. Right now, with our first word news, let's listen to Ritika Gupta. Ritika?
Morning, Tom, Francine. In New Jersey, a gunman reportedly dressed as a FedEx driver shot and killed the son of a federal judge and wounded her husband. The judge, Esther Salas, was in the house at the time but was not injured. Law enforcement says it doesn't know of any specific threats against her last week. Salas was assigned to a lawsuit against Deutsche Bank linked to disgraced financier Jeffrey Epstein. The 4 countries that have been holding up a European Union rescue package are now set to sign off on a key proposal. The Netherlands, Austria, Denmark and Sweden are satisfied with $450 billion of the fund being made available as grants. The rest will be in the form of low-interest loans. EU leaders will meet again today to work out remaining issues. President Trump is playing down a resurgence of coronavirus cases in the U.S. He told Fox News that many people experience nothing more than sniffles. The president called the U.S. response to the outbreak the envy of the world, and he called infectious diseases chief Anthony Fauci alarmist. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Becalmed in the water. That's where we are in the data right now. Futures at -5, Dow futures at -26. I would say the one salient point is the VIX has migrated in over the last 10 days from a 28 good news level to a 26.20 good news level. That's germane, that the VIX has come in from 28 to 26. We're also watching the various euro makeup, that stronger euro. And Francine, of course, we look at the short-term European paper.
Yeah, we look at actually the spread between Italian and German bonds, and if you look at the impact it's had, given that we understand that leaders did make progress in negotiating this historic stimulus package, so the gauge, which is the gauge of risk in the region, the Italian 10-year bond yield spread over Germany, it actually fell the lowest level since March. The euro is also strengthening, and overall European markets holding, I wouldn't say strong, Tom, but they're gaining some 0.2%.
It is a roll-up of the names of the hydrocarbon business. First we saw Occidental and Anadarko, and now we see Chevron in Noble, N-O-B-L-E, Noble, will be taken out. The headlines are simple here. What really gets my attention is the modest premium, 7.6% to the Friday close. It's an all-stock deal. We'll have much more on that, but this is something we've been seeing, challenges for the challenge of hydrocarbons and the quality companies being taken out opportunistically by the big types as well. We got so much to talk about on, well, political diplomacy, the EU summit. I know John Farrell wants to lean on that as we move forward. But right now, on actually putting money at risk into Q3, into August, and into the end of the year, and of course, trying to look out long-term to 2023. No one better than David Pearl of Epic Investment Partners. Of course, cash flow reigns supreme with Mr. Pearl in his shop. How's that cash flow doing, David? How's the cash flow season gone?
Actually, it's been very good, and thanks for having me on. The banks and financials that have reported so far actually had good numbers, but the question is really about the market. It has been a macro-driven market. So, for instance, there were a bunch of banks that reported good numbers, and on Friday they were up 3, 4, 5%, like Citizens Bank, and ended down because the market just decided, the economy is not recovering anytime soon. So unfortunately, fundamentals have not necessarily shown through. But at the same time, it is a question of your expectations relative to the market. The first of the FANG stocks to report was Netflix last week, and the stock, had been up 60+% during the year and did not beat expectations. And frankly, from a free cash flow point of view, they're going way negative next year. This was like the best year they could have had. And the question is really, does the leadership change?
Right. Well, Mike Wilson at Morgan Stanley over the weekend trotted out a note, David, into your wheelhouse, which is you've got cyclical movement at one point, and then you've got momentum, FANG stock movement at another point. When do they coalesce into an up market? What will that take?
Well, I think the question is if the market is going to have a tremendously tough time over the next few months, the leadership probably doesn't change, which is growth momentum. However, the opportunity for making money is to buy the rest of the market. And, it's so narrow that the 6 FANG stocks are 20% of the market cap of the S&P 500. The top decile of large stocks are 50%. So it is a narrow market, and the rest of the stocks are way cheaper, thinking about financials, industrials, some consumer discretionary. So as long as we believe that one day we get out of this, and I do think we will have a vaccine next year, and the market looking ahead past that, you have a big opportunity to buy economically sensitive stocks. And we will probably be in a technical recession based on the data right now. And in the last 14 out of 14 recessions, value stocks lead the way out. So cyclicals and value will probably have their moment again, and it will be a big move sometime over the next 12 months. But, again, I wish I could time it. I don't think it's in the next 3. But we are long-term investors. That's the point.
Yeah, but David, let me just jump in, if you can hear me. Yep. I mean, we don't exactly, in terms of policies, right, tax policies from President Trump or a potential President Biden in the White House come November, what does that do to the markets, and how are you pricing that in right now?
Yeah, so it clearly will hurt earnings. But, when you think of some of the leadership stocks today, they're not particularly profitable. We've rewarded revenue growth over profitability. And, I could clearly show you some of the stocks. Everyone talks about Tesla, but it's far more than that. PayPal is worth more than Citi and Wells Fargo. Netflix is worth more than Disney right now, and they're not profitable, really. So that has not affected it. But over the next year, if taxes go up, it will certainly dampen the recovery. But, we're talking about a difference of financials trading at 10 to 12 times earnings, as an example, versus, 50 to 60 or more for Amazon. So there's a big gulf And I don't think the financials are as vulnerable given the low valuation and low expectations at this point.
When you look at when you look at best value, do you see anything outside the U.S., or is it too risky given that, again, it's very difficult to predict what kind of second lockdown or targeted lockdowns we could be in until we have a vaccine?
Yeah, it's even more than that. And you talked about the stimulus. In the U.S., we will get a stimulus. It's a bidding war between, the Republicans at $1 trillion and the Democrats at $3.5 trillion. So assuming a stimulus goes through, that will keep the consumers spending, so we're never going to have the collapse that we could have had. The problem in Europe is getting a fiscal stimulus done. And in Asia, it really depends on the markets, obviously, but they are having, again, as you're talking about, a resurgence of the virus. So I think the U.S. will get through this. I think the main point is if you're investing for longer than a year in the U.S., it's good.
Right.
In Europe, you really probably want to be defensive.
David Pearl, the news flow is Noble and Chevron taking out Noble. All those oil charts, whether it's Exxon or Noble, they all look the same, a total crater. Can you buy hydrocarbons?
Wow. We are definitely underweight the energy sector, but we don't want to be a zero weight because you're having very volatile moves in the sector. I think they're doing the right thing from a fundamental and economic point of view, which is consolidation to bring cost of capital down, to bring capital spending down by consolidating this industry. There's no doubt about it. And again, they don't go away, but it is hard to see the leadership in this industry other than a trade.
No, this has been good. David Pearl, thank you for the Monday brief with Epic Investment Partners here on growthiness and valueness as well. Coming up in the 7 o'clock hour, I've got some really good conversations for the gentleman from Alexandria will join us here, the Democrat Don Beyer, and then David Malpass in the 7 o'clock hour, a timely update from the World Bank on this horrific pandemic. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishka Gupta. Let's get the Bloomberg Business Flash. Bloomberg's learned that Norwegian online marketplace Adventure is near an agreement to buy eBay's classified advertising unit. The price, about $9 billion in cash and stock. The deal will give eBay a significant minority stake in the combined company. Boeing is facing a financial drag from dozens of undelivered 787 jets. The problem is that airlines ordered the 787s have been hammered by the collapse in demand for travel, and they don't want to pick them up. Boeing had counted on the 787 to help pay for $20 billion in costs it's rung up since the 737 MAX was grounded after 2 crashes. And Facebook's top advertiser reportedly has slashed its ad spending on the platform. According to the Wall Street Journal, Disney has halted advertising of its new streaming service, Disney+. The company also has fewer movies to market this summer because of the coronavirus lockdown. The Journal says it's unlikely Disney's ad spending will return unless Facebook changes its handling of hate speech and misleading content. And Chevron reportedly is close to buying Noble Energy for about $5 billion in stock. According to Dow Jones, the deal would be valued at about $13 billion when you include Noble's debt. This would be the largest takeover in the oil industry since it was rocked by the coronavirus pandemic. And that's a Bloomberg Business Flash. Tom Francine.
Ritika, thank you so much. Coming up, our conversation of the day on politics, without question, as the GOP meets at the White House, the other side of the coin and the middle side of the Democratic Party, Don Beyer, the Democrat from Virginia. Look for that next. This is Bloomberg. Good morning.
Now, if we continue in the trend we are, by 2030, we will have 840 million people undernourished. And COVID-19 exacerbates that even more. And our projections is that with COVID-19 in 2020, we will increase undernourishment between 83 and 132 million people more going into undernourishment.
us are safe until all of us are safe. We need to have a global approach into handling and fighting COVID-19, a global pandemic. Part of this, of course, finding an effective vaccine.
Many of those cases are young people that would heal in a day. They have the sniffles, and we put it down as a test. Many of them, don't forget, I guess it's like 99.7%. People are going to get better, and in many cases, they're going to get better very quickly.
A contentious interview with the president and Chris Wallace yesterday on Fox TV. Everybody was fact-checking and correcting on the sniffles. Right now, a gentleman who had the sniffles once and was told to be quiet. Don Beyer joins us, 8th District of Virginia. This is just outside Washington. Don, you wear the badge of honor of a generation, which is you survived Outward Bound at Dartmouth. If you had the sniffles at Outward Bound at Dartmouth, nobody cared, did they?
No, they didn't. And it was a winter course too, Tom.
You know, that's a real badge of honor.
The snow was shoulder high the whole time.
A real badge of honor at the time. Sir, I've got to go to you on the health of the president and the health of Vice President Biden. Does it matter on the first Tuesday in November, the health of these two individuals?
Oh, absolutely. One of the reasons we're looking for a younger vice president for Joe Biden is because he's 77, 78 years old. Yes, it matters a great deal. But what really worries me more is the health of the American public and this president who somehow wants to deny testing and contact tracing and additional funds for states to try to manage this illness.
Well, we're going to drive that conversation forward right now, but I must ask you first, who would you like to see as vice president for your candidate?
My top two have been Karen Bass and Val Demings, but I'm thrilled with whoever the vice president picks.
Okay, let us talk about this meeting at the White House today. Senator McConnell has to go in there with the GOP, and by all reports, folks, Greg Valliere with a great note this morning, the GOP is absolutely petrified of this election the first week in November. How should Democrats respond to the chaos between the senator from Kentucky and the president?
Well, we don't celebrate it. We want the country to be competent and moving forward. This is one of those rare cases where I think the Republican senators are closer to, the sensible path forward than the president. The president, as we saw in the Rose Garden speech, is just all over the place. And his knucklehead is saying, let's not test anymore, denies the ability to keep other people safe. I mean, yes, there are going to be people that are asymptomatic, so it's even more important that we find out if they're sick because they're not transmitting it to the people that they work with, the people they're in contact with.
Congressman, when people go and vote in November, in that ballot, what will they think about? Will they think about COVID, the response to COVID? Will they think about the economy? Will they think about press conferences in the Rose Garden?
I think all of that, although I've always been impressed that the best predictor of how a presidential election turns out is where the American people think that whether they're on the right track or the wrong track. And that poll, which has been around for 50-some years, now is like 74, 75% on the wrong track, the highest it's ever been. We're just so disappointed with the government's response to coronavirus, withdrawing from every international organization, the craziness of the tax cuts only for the very rich, et cetera, et cetera. Those are all going to come together to one impression.
Do you trust the polls? The polls have a clear, advancement for Joe Biden. But what if people support President Trump and don't dare say so now?
I do trust the polls overall. We go back to the surprise election of Donald Trump over Hillary. Everyone thought Hillary was going to win, but most of the polls only showed her with a 2, 3, 4% lead, much of which had evaporated by election day. Any one poll, no, but when you put many polls together, yes. However, we're still 104, 105 days away. A week's a long time in politics, so we could very much get a sort of reversion to the mean. It will get closer. I think everyone expects it will get closer.
Dunbar.
And there's no reason for anybody to relax because Joe Biden has a so-called 15-point lead.
Dunbar, maybe more than anybody I've talked to recently, you're wired into small business. Dunbar Volvo, I could go down to Falls Church today and try to figure out what the pandemic's doing. Do you just anticipate that furloughs will become firings? I mean, are you steeled to see very small business or Dunbar Volvo small business or big business to lay off a lot of people? Is that what we've got ahead of us?
Tom, I'm not sure that there'll be more layoffs, but yes, the people that were laid off that could come back have largely come back, which is why we saw that surge in June. Now the 30 million people that are unemployed are much more in a deeply structural unemployment situation, which is why it's so critical that we extend unemployment insurance, which is about to run out, in less than 2 weeks. Mitch McConnell's supposed to roll his bill out this week, but even if it passes right away, it's going to be really tough to get those checks to those people.
Congressman Kevin Cirilli, of course, is way up to speed on this versus me, but I want you as a moderate Democrat to speak to the true liberals of your party. Vice President Biden needs to win. Can he do that without upsetting the true liberals of your party?
Yes. For the people that are on the farther left, they have to realize that Joe, as wonderful as he is, first of all, has adopted a very progressive agenda. He's picked up a lot of things from Elizabeth and Bernie, but also, my God, the alternative is 4 more years of Donald Trump. No progressive can want that.
Don Beyer, thank you so much from the 8th District in Virginia. Greatly appreciate it this morning. Let me look at some data right now, and we got the market a little bit weaker, but really, really quite quiet this morning. And I'll be honest, Fran, I'll let you pick it up on the EU data. I thought the EU data would be more rambunctious this morning, and it's not.
No, the data, I mean, a lot of the focus, Tom, I guess, is on what's happening in Brussels, right? So we had really tough negotiations. We're on day 4 of the summit that was only meant to last 2 days. But stocks are advancing because leaders are making progress in negotiating this historic stimulus package. A lot of people say, look, maybe stocks are advanced too much because it's not that historic, because it will fall short of what we were promised a couple of months ago. But the euro is strengthening, and then into these 10-year bond yields spread over Germany, actually falling to the lowest level since March, Tom.
Very good. Coming up, let's tell you a little about the conversations today that we've got going. David Malpass here in a bit. This is an important conversation. Michael Evans and Timely with David Rubenstein. This, of course, is Ant tries to find a public offering in Hong Kong and Shanghai. So we'll look for that with David Rubenstein, with Michael Evans. Again, as well, I'll be speaking with David Malpass of the World Bank. Incredibly important and timely conversation given the global spread of this pandemic. So look for that, please. From London, from New York, this is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get the Bloomberg First Word News. The European Union may be on the verge of a deal over that massive stimulus package. The Netherlands, Austria, Denmark and Sweden have been holding up negotiations. Now they appear to be ready to agree that $450 billion of the fund would be made available as grants, with the rest coming as low-interest loans. The emergency stimulus package could be worth about $860 billion. Brexit negotiators are in a tense standoff, and that's dashed hopes of a swift deal. Informal meetings between the European Union and the UK have failed to make progress since last month. The latest round of talks begins today in London. British negotiators say the EU's concessions aren't enough. The EU says its attempts to compromise aren't being reciprocated. One Democratic representative calls Florida's coronavirus outbreak out of control. Donna Shalala told ABC there would be a lockdown of the entire state. Meanwhile, the mayor of Los Angeles said his city is on the brink of new restrictions because of the increase in virus cases. These comments suggest that months of trade-offs between health and the economy are far from over. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. Greatly appreciate it. Right now to Brussels and Maria Tadeo. And the basic idea here, folks, is there's two arguing points. One is the grants, the loans, the amount of money flowing around in any EU deal. And the other is a bitter battle on how the frugal core countries will dictate mandates to the weaker countries. There's really some huge pressure there. Maria, let me begin there. We're going to see something at your 4 p.m., our 10 a.m. time. Will Mr. Orban and Mr. Rutte be on speaking terms at 4 p.m. your time?
Well, it's hard to say at this point because they did have a lot of bad blood over the weekend. And in fact, I would say it's not just Orban. At this point, it really does feel like it's Rutte versus everyone else. Emmanuel Macron had an issue with him on Saturday. We understand that, in fact, at one point, he walked out of a meeting. We also heard some very tough language from Giuseppe Conte, almost arguing that a very tiny country is holding hostage the entire European Union. But I would say at 7 a.m. in the morning, I happened to bump into Mark Rutte at 7 a.m. when he was heading into his hotel, and he told me that for him, this is about protecting his taxpayers, and he believes he's doing the right thing for Europe. The more conditionality and a bigger push for reforms over the long picture will be good for the European Union. The question is, do we get a deal at 4 p.m. today? We do get a hint that it is moving close to that. 390 billion euros. That is the price tag for a compromise here after a very long negotiation. But we are hearing, as I point out by French officials, that they now finally see a path to a deal.
Okay, great. What happens next?
Well, that's equally difficult to say at this point, because when the money is signed off, that takes us to another sticking point, which is the governance of this package. One of the things that the frugals keep repeating time and time and again is that they want to see that the money is used properly, that they want to see that there are checks, and at one point perhaps even call for a veto on the payments of the subsidies to a country like Italy. And you can see why this is problematic, because Giuseppe Conte cannot take anything that looks like a troika to Italy. He has to be able to present something that looks like a win for the Italian people, who are still, I mean, you have to keep this in mind, really in mourning over the coronavirus and really the devastation that we saw there and the amount of people that died. So this is a very tricky situation for the Italian Prime Minister, who's overseeing a very shaky coalition.
Maria, the numbers we're talking about is 390 billion euros in grants. How much does that fall short of what was promised a couple of months ago? And does it mean that the Italian Prime Minister can go back home and hold his head high, or are the citizens going to say, well, look, that's not enough, you didn't negotiate well enough for us?
Well, Francine, there's two theories going around. Just 4 weeks ago, we were talking about the ESM. We were talking about a bailout for a country potentially like Italy, and that's moved on from that point. We're now looking at almost 400 billion euros in grants. This is not something that Italy will have to repay. It's not going into the debt to GDP ratio, and that was key for the Italians. But you make a good point. We started the negotiation at 500 billion euros. The French, Angela Merkel, the Italians, they said they would not go below 400 billion euros, and now we're looking at 390 billion euros. So clearly it's been watered down, and that is something that Mark Rutte would tell you, in a way, it's a win for the frugals.
I mean, does it really make a difference to the economy? Does a country like Italy just need a lot more if it's going to get out of this crisis?
Well, Francine, at this point, it's really unclear, because we know that even if we do get to 390 billion euros, Italy would get a windfall. And the Italians will also recognize that that is good. Anything that means not tapping into more credit, not giving on to that pile of debt that is now 140% of GDP, moving closer to that, and the worst case scenario is good for the economy. But they also concede that they have to carry through reforms. And there's issues here that the Italian economy has had for decades now. This is not going to be solved with the recovery fund, but they do agree that subsidies, of course, will be very helpful for Italy.
Maria, you've mentioned the Frugals. They're a great band. I love what the Frugals did with the Kinks, Tired of Waiting. You look at the Frugals, great. They're the rich guys, and everybody else is the poor guys. Are Germany and France part of the Frugals?
No, they're not, and they've made that very clear. Angela Merkel and Emmanuel Macron walked out of a meeting on Saturday night with Rutte. He also confirmed that. He said they looked very grumpy. For Angela Merkel, this has not been an easy negotiation with Rutte. Now it's clear that there's very real tension between Emmanuel Macron, Rutte, and also the Austrians, and he does believe that they are not doing justice to the European project. And he also said, in fact, the risk here is that the Netherlands becomes the UK for the EU, and that's something that really didn't go down with Emmanuel Macron. I would also point out, just very quickly, Tom, that they would also say that this idea that everyone else is poor is actually not true, because let's factor in that Italy does pay into the European budget. The Italians do put money in the pot.
This has been wonderful, Maria. It's great coverage. Thank you so much. A long weekend for Maria Tadeo in Brussels, and that story continues as well this morning. We're going to try to fit all this together. We've had disparate themes through the morning. Chet Naya can piece it together for us. He's a chief economist, global head of economics from Morgan Stanley. Morgan Stanley with some interesting nuances in the equity market with Ellen Zentner in the United States, and Chet Naya will bring it together for us. This is Bloomberg. Good morning.
Opportunity knocks at the door. Don't say, blimey, I've still got my pajamas on. Say yes to stuff, and it'll take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It was Occidental taking out Anadarko. That was a different time and place. This morning it is Chevron to buy out Noble in a very, very changed hydrocarbon space. The headlines are stunning. Forget about $10.38. Noble Energy is going to be about 3% of the combined company. That really shows the collapse in size and grandeur for what was really one of our great mid-sized companies. The other statistic I see here that's just extraordinary is they're acquiring for oil for something like $5 a barrel. I don't know what that means, but that really shows you the angst in hydrocarbons. Chevron to take out Noble. Francine?
Yeah, Tom, we'll have plenty more, of course, on Chevron and some of the oil majors. Meanwhile, the euro is rising as EU governments appear to be working through their differences over a stimulus plan. We were just talking about it with our Maria Tadeo. Now, the bloc's 27 leaders will gather again, 4 p.m. Brussels time, to try and settle some issues. So let's get a market perspective, but also an economics perspective. We're delighted to be joined by Chetan Ahya, Morgan Stanley chief economist and global head of economics, who joins us now. Chetan, always great to speak to you. So thank you so much for joining us on Bloomberg Surveillance. When you look at what the EU leaders are agreeing on, what will that actually do for the European economy? It seems like it's peanuts compared to what some of the countries actually need to recover from COVID.
Francine, the most important thing what this deal does is reduces the risk premium for the periphery countries. So I think the cost of borrowing for those countries will come down, and that will basically, it's already beginning to happen. We've seen that. And that means that the financial conditions for those countries reduces. Once the risk-free rate reduces, you also have a pass-through into the private sector borrowing costs. So this is the biggest benefit of this deal, and it opens up the door that in future, even while this is not seen as a permanent deal, it will open up the door for the group to take up more such measures in future. So I think this is a very big positive step in the right direction for Europe.
Chetan, can you frame strong euro in finally a weak dollar, or is that not likely to happen?
So our team, Matt Hornback and team, are forecasting the euro to weaken, to strengthen, and that's because we are expecting the data to be strong in Europe relative to U.S. And at the same time, this deal, which has just been sort of looking like it's getting done now, will help reduce the risk premium on the sovereign assets in European Union. So both those factors is making Matt Hornback feel strong about the euro.
How have you adjusted your global call? I mean, we've got the festivities in Europe. We've got all sorts of challenges in Asia, some serious commodity issues in coffee, cocoa, and the like. Can you amend to any sense of optimism on international economic growth?
Well, we have been optimistic, as you know, Tom. We have been talking about this cycle seeing a V-shaped recovery. Yes, it's a deep V, but it's a V. And we have been talking about global growth coming out to pre-COVID levels by fourth quarter of 2020. That's pretty a positive, upbeat view already.
Chetan, if I finally look at the U.S. economy into the election, I know Ellen Zentner's been out front on this. Do we see, I mean, forget about V-shaped, but is there any sense of economic growth when Q3 GDP is reported right near the election?
Well, Q3 will be actually the strongest rebound. As you know, Q2 will be down quite meaningfully because of the bulk of the impact for COVID coming in through in that quarter. And so we'll definitely get very strong growth in the third quarter. But I think that should be expected.
Chetan, how do you view the possible, second waves and lockdowns? I don't know how difficult it is to model as a chief economist, but it seems crucial when you look at GDP on what kind of economy, how it can function, or whether we'll go into lockdown or partial lockdown again.
So, Francine, we are looking at two things. One is the spread of the virus and its impact on the economy, and the second is stimulus. Now, as regards the spread of the virus is concerned, what we are observing is that the link of the economy to virus is changing. While what had happened in the first round is we had seen aggressive lockdown and stay-at-home orders. Whereas, as you see right now, country after country and various states in the U.S. as well, we are not seeing states taking up aggressive stay-at-home orders. We are seeing them taking some controls or restrictions which are related to in-room dining or indoor dining, but we're not seeing aggressive stay-at-home orders. And the reason for that is that in this round, we are seeing lesser hospitalizations relative to new cases. We are seeing lesser fatality relative to hospitalization. So the impact on the economy because of this has been smaller. And so we think that the sequential activity will continue to improve even while new cases have risen in the U.S. and in other parts of the world. For example, when you look at the high-frequency data points like auto sales, credit card spending, retail gasoline demand, all of those indicators are telling us in the first 2 weeks of July, you have still seen progress over the month of June, despite the new cases rising in the U.S. significantly.
Chetan, when you talk about more, policy stimulus being forthcoming, will it be enough to deal with deflationary pressures, or how do you see that working out?
Well, I think that would be that's a second and big part of our framework, and we are expecting the U.S. to announce about $1 trillion of stimulus by early August. And there is upside risk to this. It could be as high as $1.5 trillion. And this is going to be important because in case you have aggressive restrictions taking place because of COVID spread, then you would possibly have to have this support coming in from the fiscal side, especially the unemployment insurance payments to the unemployed. And we think that that will come through. It might be lower in size versus the $600 per week. It could be lower number, but it will still come through. And there is a possibility that we could get a ad hoc payment, which is on the lines of $1,200, which was given in the very first instance. So this stimulus is going to be important because that will ensure that even if consumers can't get out to spend, they would be able to spend online, and they will not be risk averse enough that it takes down the sequential activities.
Do you worry about deflationary pressures, or is that a conversation for next year?
I think right now we are still looking for a reflationary trend. So on inflation outlook, we are looking at it to evolve in 3 stages. The first one, which is in the near term, the inflation prints are going to be weak, which we call it as the disinflationary phase. And as the economy is recovering, which will be seen very clearly from the third quarter, we are entering already in that reflationary phase now. And then going forward, by second half of 2021, we think inflation in the U.S. especially will start to look like it's getting closer to 2%. And then in 2022 is where you will start to see inflationary pressures, when we expect inflation to cross 2%, which is the Fed's goal. So this is the way we are thinking about inflation outlook, Francine.
Chetan, thanks so much. Chetan Iyer, there, Morgan Stanley chief economist and global head of economics, with an important call on inflation. Up next, Dr. Joshua Sharfstein. He's Johns Hopkins University Vice Dean for Public Health Practice and Community Engagement at the Bloomberg School of Public Health. You've guessed it, we'll talk COVID-19. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Joining us now is Josh Sharfstein. He's Johns Hopkins University Vice Dean for Public Health Practice and Community Engagement at the Bloomberg School of Public Health. Josh, I feel like every time you come on, I ask you a similar question, which is there are states in the U.S. that see the number of infections rising. Is it too late to stop it? How do they do it? And why do they not have a handle on it yet?
So there are many states in the United States where it is not a good situation, where cases are rising and there is just an enormous amount of community transmission, and there are a lot of people at risk. I think we're in this situation because states opened quickly and people really felt like the virus threat had passed when it had not. I think that really getting control over the situation in these states is probably going to require a greater degree of, closing down certain things. I don't think it has to be a stay-at-home order necessarily, but I think to see where the virus is spreading and in those locations, not give the virus that opportunity, like particularly places like bars, which have just been the source of outbreaks all over the world.
Okay, what do we know about schools reopening in September in the U.S.?
Well, this is now quite a contentious issue, with some people saying it doesn't look like kids get that sick, so what's the big deal? And other people saying, well, some kids do get that sick, and of course you have teachers and staff in the schools, and we have to be careful. I think that the right answer is a middle ground, where you're looking for areas where the virus is under control first, and then the schools take reasonable steps like have been taken in other countries with pretty good results. So the challenge is when people, take these extreme positions, it's really hard for people to instead work together to find a solution in the middle. And frankly, you need resources for that solution in the middle, and those have not been forthcoming.
Josh, for our international audience, who decides what schools reopen? Do they have extra funding to make sure that there are, things in place? One of the points that you're making, is it up to the federal government, or is it much more local?
Well, the decisions on whether to open in the United States are pretty local. It may be down at the county level, not even at the state level. The resources generally have to come from the federal government because of the way the government's funded. The states have to balance their budgets, and it's the federal government providing money for the pandemic. They provided some money in one of the early pieces of legislation, but not a lot has reached schools. In some areas where the money has gotten there, it's gone for things like food, extra food for kids, and maybe some tablets or computers to bring home. But it's a lot more, because we're talking about needing more space, needing more staff, needing more buses, things like that really do cost money, but it's a worthwhile investment. I mean, we need kids to learn. We want them to have the protections and social development of school. It's just really important for the pandemic not to cast a huge shadow over our society, for kids to be able to go back to school, but they just can't if it's not safe.
How close are we to finding a vaccine? I know we're expecting, this trial with the Oxford vaccine to come to fruition. There are a number of trials. Are we close to something, or is it just very small steps towards something that could be promising?
Well, I think what's good is that we haven't been derailed yet. I mean, there are all kinds of problems that could have happened so far that haven't happened, and we have multiple candidates getting into large trials, multiple candidate vaccines, so that's another good sign. But truthfully, you just don't know. A lot of these early vaccine studies are with new types of vaccine platforms that we really hope are going to work, but you just don't know until you do the study. And so hopefully there'll be well-run studies. That means that patients will get enrolled quickly, and we'll be able to see very quickly whether they work and get a good measure of their safety. So, I believe Dr. Fauci when he says he's cautiously optimistic.
Joshua, thank you so much. Josh Sarfstein there of Johns Hopkins. And be sure to check out VRUS Go on the Bloomberg for the latest information, and tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. In the meantime, the other big story of the day, of course, is the EU Leaders Summit. We understand that negotiations will take place in Brussels in 4 hours from now. The EU, we understand the hardliners are ready to accept some 390 billion euros in grants. The euro is holding to a 4-month high on these EU talks. As we understand, they're making progress in negotiating this stimulus package. Coming up, join Tom Keene, Jonathan Ferro, and Lisa Abramovitz for more Bloomberg Surveillance.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
confidence is the elusive issue here, and in an environment where unemployment is going up, and for those that are in work, there will be that fear of the specter of unemployment coming down the tracks.
Folks are just not going to go out, and they're not going to spend at the same levels if they feel insecure about their family's safety and their own health.
A lot of businesses are not buying into the V. They see a different destination regardless of the journey.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance with equity futures recovering. We're live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Tom Keene, it is about the signal, not the size, coming out of Europe. A negotiation through the weekend about a size of the package. It is about the signal this morning. Some progress in Brussels.
Well, progress, and it starts again in 3 hours, John. They're taking a break right now. Maria Tadeo in Brussels saying at 10 a.m. New York time, maybe we'll get a start up there. And yes, there's progress made. And then you roll right over in the stimulus, and the struggle here, John, is to get to August. And that's what they're going to do at the White House today is, well, this is a huge deal to have Senator McConnell go up to see Mr. Trump. And as Greg Villiers says, John, in his morning note, this is a Republican Party in full-scale panic.
Lisa, Congress returning to work, a $2 trillion spread between Democrats and Republicans going into these negotiations.
Yeah, it's going to be really interesting to see what President Trump is demanding and what he's willing to give up. We'll be watching that throughout the day. Let's start with what Tom already laid out. Getting ahead of me, thank you very much, Tom. 10 a.m. Eastern time or 4 p.m. Brussels time, we are going to get the EU leaders reconvening to try to get to some sort of agreement. The signal is positive. The question is in the details, John, as you were talking about earlier today. We are going to hear from White House meeting with McConnell as well as Treasury Secretary Steve Mnuchin to discuss a new stimulus package. Very curious about the payroll tax cuts that President Trump is demanding that has bipartisan opposition. And then after market, we're going to get the kickoff of tech earnings with IBM leading the charge. Then we're going to be getting later Microsoft on Wednesday, Google, Amazon, Apple, and Facebook all next week, John.
Amazon, 5-day losing streak. Coming into Monday, Tom Keene, some real tech weakness and underperformance last week, really defining the week for the equity market. The NASDAQ underperforming, outperforming, everything counts.
Yeah, and I know you saw it, John. Mike Wilson, I thought, had a really smart note at Morgan Stanley in the last day or so, talking about when do they finally coalesce. One time it's the cyclicals doing well, and then the tech does well, back and forth and back and forth. And you just wonder when they come together and make a real bull market.
Equities recovering this morning, Tom, down by about 0.2% on the S&P 500, negative 6 points. In the FX market, slightly firmer euro. Euro dollar 114.55, up 0.25%. Are there reasons for optimism on the continent? Let's bring in David Stubbs, shall we? JP Morgan Private Bank Head of Market Strategy. David, fantastic to catch up with you, sir. Your takeaway after a weekend of negotiations?
Yeah, John, I think a modest positive surprise. The fact that they're coming back and talking again shows real intent to nail down the headline numbers in this deal. John, we knew that there would be some compromises on the road to final recovery and final agreement here. We knew the headline number would come down, looks like it is, from that 750. We knew there'd be a shift from grants into loans. I'm encouraged that the latest number on grants seems to be 390 billion, down from 500. That's still enough for the market to see this as a significant package, if not a panacea for the troubles. Once we get some agreement on that, hopefully it comes today, then we move on to some other thorny issues around governance, around conditionality on the money. But ultimately, John, our view remains the same. This is going to get done, and it's quite a big moment for Europe.
David Stubbs, how is your market strategy colored by what you hear from Bruce Kasman and Michael Ferroli? I mean, the fact is, our audience listening, our audience hearing this is saying, look, there's got to be layoffs to come. How do you adapt your market call to the presumed unemployment to come?
Well, you're absolutely right, Tom. Yeah, there's going to be a lot more unemployment coming, and certainly a shift from what was temporary unemployment into permanent to some degree. It's going to be a very, very challenging labor market in the United States and around the world for a number of quarters, probably a number of years. For us, that means a couple of things. It means, firstly, it confirms we are early cycle. There's going to be plenty of spare capacity in the economy to grow into in coming years. It's going to mean that inflation is likely to be very low. Central banks are full, foot to the floor, trying to get the economy back up and running, trying to get inflation back to target. And that tells you a few things. You're going to have policymakers at your back. Hopefully we don't get any policy mistakes. Obviously the debate in Washington about the next level of stimulus is very, very important. Hopefully we see that number higher rather than lower. The US economy certainly needs it. And as long as we get those things together, we should, in theory, be in early cycle investing, which means usually you want to start to put cash to work in parts of the economy, sectors and companies that are going to survive the shakeout and thrive in the next decade. And we also want to take exposure throughout the credit spectrum. It looks to us potentially it could even be past the peak of the default cycle. In this cycle, you've seen a lot of defaults and downgrades, over 200 billion of fallen angels out of the investment grade market as well. A lot of that cleansing has been done. Spreads are still wide. You can take tactical exposure there and also find a way within this ultra low yielding environment to have some anchors to your portfolio. We like a little bit of an allocation to gold as well as utilizing some alternatives in this environment, Tom.
What's the policy mistake, David, that you're most concerned about?
A premature turn towards austerity, the exact policy mistake that was made across the developed world in the early part of the last decade in the aftermath of the global financial crisis. Getting worried too soon about the trajectory of public debt, trying too soon and too aggressively to close the budget deficit when there is large parts of the economy that need support, that are fragile, and you haven't seen a return to the momentum, the animal spirits of the private sector, and really starting to put people back to work. We know that with assistance from central banks, the governments of the developed world have no problem issuing the vast amounts of debts they need. I don't see a problem anytime soon. They need to keep focused on supporting the market through this enormous shock, supporting the economy, businesses large and small, allow the recovery to continue, hopefully get past this health crisis for sure, and then start to lay the foundation for future growth. All of that is more important than worrying about the budget deficit right now.
There seems to be commitment to that here in the United States, a $2 trillion spread, nevertheless, between Republicans and Democrats. Quite clearly, there are three broad debates in the equity market right now, David. It is small caps versus large, it is value versus growth, it is international versus the United States. On those three debates, David, do you have one that you have a little bit more conviction on over the others?
I think at the moment you'd be very brave to go into outright small caps because we are still dealing with a lot of the economic fallout, and that is particularly difficult for smaller companies to deal with. They tend to have higher leverage levels, lower cash balances. They tend to have less ability to tap certain funding sources. And if you look into the financials in the small cap, if we do see a wave of bankruptcies and solvencies amongst the household sector, it'll be the smaller the smaller banks which maybe take a hit there. So I think probably have most conviction on that. The other two rotations, of course, we talk about it every day, when to buy international, when to buy value. Obviously, the course of the virus is a key variable here. As horrendous as the situation is in parts of the world, and including in some of the states in the US, if you look at the growth rates to cases and to hospitalizations, tentatively, we see a little bit of a slowdown just on the growth rate at the moment. Markets usually react, as you know, to the second derivative, and so potentially that could be part of a modest rotation if we see better news going forward. Big if, of course, and of course we're in earnings season now. That's going to give us a lot of color again. We see a huge sector spread. We expect every sector is going to be negative, we think, but obviously utilities and tech only single digits. Other areas much worse affected than that. We could, for all we know, see another blowout quarter from tech earnings, and this weakness in the last few days will turn around. Yeah. But any sign that we are getting past the threat of further shutdowns in key economies of the world should be greeted very well by the value sector, by international stocks.
Okay, but David, the fact is we have value traps. I look at Chevron Noble as a textbook example. It was taken out for barely a premium. Noble was an August company years ago. What a crater it's been. How do you avoid the value traps that are out there?
Great question, Tom. I think focus on long-run growth trajectories of these underlying sectors. We talk about these themes, these mega trends all the time. Everyone can see how the digital economy has gained from this situation, the need for healthcare innovation, sustainability's renewed focus amongst investors. If your underlying business is linked in some ways to those trends, and you are trading at a reasonable valuation, well, then obviously the likelihood of a value trap goes away. I think also the willingness of management to evolve in a company very rapidly, and the strength of the balance sheet, key things that we look at. No doubt that there's large parts of the investing landscape that are challenged in some way in secular terms. And that's why we believe strongly in active management, both in equities and fixed income, to try and escape some of those big traps.
David, always great to catch up with you, sir, especially this morning. David Stubbs there of JP Morgan Private Bank. Tom Keene, a massive day on both sides of the Atlantic on the next steps for fiscal authorities.
Well, it is. There's no question about it. And you can shift folks here as the EU clicks in about 2 hours, 50 minutes. We'll get an announcement there. We'll see. But just as importantly, at the White House today, everyone is transfixed here by the distance of the president, John, from his party. And that has direct, immediate impact. I was thunderstruck, John, over the weekend, how people are poised for further layoffs.
I was encouraged over the weekend by one thing with the president's interview with Mr. Wallace of Fox News. It was on the payroll tax cut.
Yeah.
He was specifically asked whether that was a red line for him to get this deal done. He didn't confirm or deny that, and I think that's encouraging because I don't think it's something the Democrats are going to go for. And when you have a $2 trillion spread, the Democrats are going to have to come in on something. They'll have to give something up. I'm not sure they want to assume a payroll tax cut in the process either.
Yeah, well, that's true. And the immediacy of the election here is tangible, John. And, my working number is 1.5 trillion, but frankly, many others are above that. So they're going to have to negotiate to get above that.
In this particular conversation, Lisa, November is the support factor, not the risk factor, because nobody wants to be seen holding up a fiscal package going into a November election. Surely that's got to be the case.
Yeah, there's an interesting question, though, about the popular support for extending the $600 enhanced unemployment benefits. It seems like there is popular support, yet Republicans are still pushing back on that, John. A key question heading into today.
A little bit later, Lisa, looking forward to a conversation with the World Bank President, David Malpass, on the need for debt forgiveness and maybe the need for fiscal stimulus in developed economies as well. In your equity market right now, we're down 0.2% on the S&P 500 from New York City this morning. Good morning. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Rishka Gupta. In New Jersey, a gunman reportedly dressed as a FedEx driver shot and killed the son of a federal judge and wounded her husband. The judge, Esther Salas, was in the house at the time but was not injured. Law enforcement says it doesn't know of any specific threats against her. Last week, Salas was assigned to a lawsuit against Deutsche Bank linked to disgraced financier Jeffrey Epstein. The 4 countries that have been holding up a European Union rescue package are now set to sign off on a key proposal. The Netherlands, Austria, Denmark and Sweden are satisfied with $450 billion of the fund being made available as grants. The rest will be in the form of low-interest loans. EU leaders will meet again today to work out remaining issues. And the White House and Senate Majority Leader Mitch McConnell begin talks today on a new coronavirus stimulus package. Bloomberg's learned that the administration is balking at $25 billion that Republican lawmakers want for testing and contact tracing. McConnell has been preparing to unveil a Republican-only bill this week before he negotiates with the Democrats. President Trump is playing down a resurgence of coronavirus cases in the U.S. He told Fox News that many people experience nothing more than the sniffles. The president called the U.S. response to the outbreak the envy of the world, and he called infectious diseases chief Anthony Fauci alarmist. And Chevron has agreed to buy Noble Energy for about $5 billion in stock. The deal would be valued at about $13 billion when you include Noble's debt. This would be the largest takeover in the oil industry since it was rocked by the coronavirus pandemic. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
the Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
The Nissan Ariya is the one that represents for the Nissan new chapter. I would say that the Nissan has a great experience because we have 10 years of the history through the Nissan Leaf. We have learned a lot of the voice from the customer.
A next phase of relief should extend the PPP, but on a more targeted basis for smaller companies and those that are especially hard hit, such as restaurants, hotels, and other travel and hospitality business.
There is a $2 trillion spread between Republicans and Democrats as Congress gets back to work in Washington, D.C. Secretary Mnuchin setting the stage going into the weekend, coming out of the weekend. It is all about fiscal policy on both sides of the Atlantic. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. In your equity market here in New York, counting you down to the opening bell, 2 hours and around about 12 minutes away. Equity futures come in just a little bit, down 7 points, recovering from the overnight losses. We're down 0.2% after putting together a week of gains and some real outperformance over big tech last week. In the FX market, 4 weeks of dollar weakness. Euro dollar 114.60, up by around about 1/3%, and really sticky 10-year nominal yield 0.62%. They come in a single basis point. Tom Keene, the bond market wide open for fiscal policy. That's the story down in Washington.
There's no question about it. It's been a pause there. Mr. Macron right now out with a headline that could be written for Washington. The leader of France cites, quote, spirit of compromise among EU leaders. And that comes to the spirit of compromise, not of the Democrats and Republicans that Jonathan mentions, but how about the Republicans and their Republican president? Kevin Cirilli is our chief compromise correspondent in Washington. What's going to be the tension at the White House today, Kevin?
Well, I think there's a host of different issues. First and foremost, the continuing tension about the politics of the pandemic, how the president is going to be able, or try to rather, reset following a difficult summer as it relates to the pandemic. But then also on the looming battle just in a few weeks pertaining to the next round of economic stimulus. We heard from the president over the weekend in an interview with Fox News with regards to how he plans to negotiate the next round of economic stimulus and whether or not he's going to push us forcefully for a payroll tax cut, much to the potentially confusion of some folks on Capitol Hill.
Kevin, what goes first in the policymaking process? Is it size or substance? Does size dictate substance, or does substance dictate size? What matters to Washington first up?
For Republicans, it's size. For Democrats, they're going to really dig in on certain policy issues that be included in there. Here's why. Republicans are arguing that the price tag of the economic stimulus must be around about $1 trillion. They don't want to see it go more than that. Even some conservatives would like it to be significantly less. Democrats are saying that there needs to be much more financial assistance, not just for public workers, but also for folks who are not public workers and need some rent assistance as well.
I mean, the pandemic is a pandemic. Do you judge, Kevin, that the size and scope and scale of case and death dynamics tilts this Washington debate?
Well, you know, I think that the data of which parts of the country are being impacted by this virus right now, it would suggest that it's typically right now more southern states that are experiencing an uptick in this. And as a result, I think that's why Republicans are really increasingly much more receptive to the idea of another round of stimulus. But look, I mean, let's not, you know, mince words here, because you've got former Vice President Joe Biden, who has been aggressively campaigning and saying that the president has had a colossal failure as it relates to his handling of this. And behind the scenes, with the reset of the president's reelection campaign, they're looking for some type of major marker at 1600 Pennsylvania Avenue and across the Potomac River in Arlington, where they're headquartered, where the campaign is headquartered, to try to get some more momentum back from them after what's been a very difficult summer for them.
Kevin, what is the logic behind President Trump's opposition of $25 billion of funding for states for testing and tracing?
Well, I think in terms of the tracing, I think there's 2 points here. The first and the foremost is that they feel that by boosting there to be more access to testing, they'll be able to get more data. That's a position that's been bolstered by the likes of people, by the people like Dr. Deborah Birx, for example, who has been carefully advising Vice President Mike Pence as well as the president on this particular matter. But beyond that, when we talk about schools, when we talk about sports institutions and the need for rapid testing, all of these different models, Lisa, are ways that, quite frankly, America is discovering in real time how they are going to have to deal with this over the immediate short term. And that's why there's a lot of confusion, because no one community has really been able, every community is different in terms of how they're handling this virus.
Kevin, there's a question, is this a stimulus bill or is this an additional round of bailout money? The question of trying to prop up an economy still beset by a pandemic versus actually engaging in infrastructure projects like the FBI headquarters that President Trump would like funding for. Can you sort of draw that distinction in terms of what's been proposed so far?
Well, one person's stimulus is another person's bailout. That's just the game of Washington, D.C. It's something that we've seen, Lisa, play out even before the pandemic. But I think the bottom line here is that the political partisanship is going to cause for many individuals to say that's a bailout unless they're able to get some stimulus for themselves. That tension's going to be on full display. I think a lot of Republicans, I spoke with several last week, who were very uncomfortable with just writing a blank check for there to be another round of stimulus. But hey, this is the situation that we find ourselves in.
Kevin, great work. Looking forward to the week ahead. Massive week ahead down in Washington. Kevin's already there. Lisa, I guess the answer has to be both. We thought, many people in Washington hoped, that we would get to July and we'd be in a different place. This economy is still under severe amount of restrictions. And for that reason, you can't enter this new phase of stimulus and stimulate an economy that is still largely, in some places, restricted from opening up. And for that reason, you have to provide something to offset the shock to income still. And you might have to do that through to year end as well.
There's been an inconsistency, though, John, and I think this is really important. A lot of economists who come on the show say good virus policy is good economic policy. We are not necessarily getting a coherent message on that front, John, and that seems to be the tension underlying this fiscal plan.
And I'd go one step further. I think, Tom, that is a reason, one of the more important reasons why people have become more constructive on Europe versus the United States over the last couple of months. It's less about them getting their act together on the fiscal front. I hope they do. It's more about the tidier, cleaner reopening process that they seem to be going through at the moment.
That is clearly the zeitgeist right now, John. I'm not sure if I believe it, but there's no question in most conversations there's a tilt that way. David Pearl of Epic Investment really pushed against that belief here about an hour and a half ago.
Democrats versus Republicans, Tom, we do it all over again. I wish we didn't have to, but that is the way things work. Obviously, I wish we didn't have to wait this long to get talking, but apparently that is the way things work. Obviously, Tom, there is a red line for the Democrats that we need to discuss, and that's the health for states. We are already starting to see state-level austerity.
Yeah, when the austerity clicks in, that I would suggest will evaporate once the actual austerity clicks in.
Well, the federal government quite clearly has the capability to act counter-cyclically, and for that reason, they should. That will be the argument going forward, and it could be the argument from the World Bank President David Malpass as well. He joins us next on this program. Looking at your equity market, we recovered just a little bit. S&P 500 futures down just around about 3 points, well off the lows, down at 0.1% on the S&P 500. As we focus on Brussels, talks resume at 4 p.m. local time. That is 10 a.m. Eastern. In your FX market, the euro advancing 114.56. We're up 0.25% on euro dollar. From New York this morning, good morning. This is Bloomberg.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro, 2 hours away from the opening bell. Here's your price action in the United States. Equity futures recovering just a little bit from the overnight losses. Futures down just 4 points on the S&P 500. Last week dominated by the underperformance in big tech. Amazon down Monday, Tuesday, Wednesday, Thursday, Friday. Microsoft off by 5%. On the week. Going to be interested to see how tech builds up ahead of earnings through the next couple of weeks, Tom.
Yeah, no question about it. I think you've nailed it, John, in terms of this is a week where tech has to decide if it wants to reassert itself. I'd also note, John, I did a look at the EM currencies. Argentina, of course, battered as well, but there is a fragility out there evident on the Bloomberg terminal. Joining us right now is David Malpass. He is Mr. Trump's selection as World Bank president. He's come in under some controversy, and then he has had to focus on this horrific virus. He is a physicist from Colorado College. David, I want you to look right now at the inertial force of this ugly pandemic. How is your World Bank adapting to the momentum of this pandemic?
Hi, Tom and John and Lisa. So the World Bank's doing okay. People are able to work from home. We've gotten a lot of programs out, over 100 programs that are directly at the health emergency. The problem is that developing countries are under immense pressure because of the global recession, the economic shutdown in the advanced countries, and the pandemic itself is still spreading through countries. And they also entered this problem with a lot of debt already on their books. So those are the problems that we're trying to address as the recession deepens, and then we hope finds the other side and we come out of it.
In your distinguished career at Bear Stearns, and particularly, David, as you build out that world-best Latin American coverage at Bear Stearns, there was a mechanism for challenges in the third world, in the emerging markets. Are the mechanisms there right now, or do we just have to go to a debt suspension? I mean, can we use the processes in EM that we have available, or is this a new territory?
I think we have to look at new territory because the debt itself has changed. In the 1980s, I was in the Reagan administration, and there was a Latin debt crisis that had come from the petrodollar recycling. Remember, the oil prices had been high, and so the banks could, the banks had a lot of deposits, and they would lend those to the developing world. And the problem was they didn't get paid back when oil prices went low. So it was a bank crisis because they couldn't, the bank deposits were a big portion of the capitalization of the banks, or they were critical. It was syndicated loans. So this is quite different. There's Euro bonds involved. There's a lot more commercial creditors than in the past. And also the nature of the debt. China is a much bigger player in this. They weren't really a creditor in the 1980s. So those two changes mean you have to look at a different process. What we're doing is a suspension of debt payments now. That's the official bilateral creditors, and we're encouraging the commercial creditors to stop taking payments from the poorest countries. That's a response to the crisis.
David, you do not represent the Trump administration, but you were certainly selected by the president to take over this important task at the World Bank. Great. He's going after other institutions, his own CDC. He's going after the World Health Organization. For all I know, he's going to go after the World Bank. How should your institution respond to a president who is not an internationalist?
One correction, Tom, I wasn't selected by him. I was proposed by him to the world community. I was happy to be elected by the board and governors of the World Bank unanimously, and it's been going well in terms of the changes that we're making at the World Bank that can help countries with growth, with better living standards, with all the things that we're trying to do: climate, education, health, and on down the line. Poverty is a big part of the problem. So if you boil it down, we want to have international cooperation among the various organizations, but the drive for growth has to come from individual countries. So that's what we're trying hard to do at the World Bank. We have country offices in almost all of the developing countries, and those offices work with the governments to find out what will work best for the countries, and then we can help fund it with grants and loans. You know, the World Bank heavily is doing grants, which helps a lot with the net positive flow into the poorest countries. That's what we want others to do. You know, it's hard to say you're going to make a loan to a country that's in extreme poverty, because where are they going to get the resources to pay it back? So we try to shift the balance toward grants.
David, that seems to be a theme throughout the world, certainly in Europe, the idea of grants, not loans. We're also talking about debt reduction, and you have been on the record saying that you do think that there needs to be some debt reduction throughout the developing world. How big a haircut are you talking about?
Well, we need to do the analysis of countries and what their debt sustainability levels are. How much debt can they support, and then reduce the amounts of debt to that. But right now, the immediate problem is the need for transparency. One thing that's going on in the market is debt reschedulings and restructurings where people don't know what the terms are. And that means other creditors are reluctant to participate if there's not knowledge of the terms. When I'm saying terms, for example, governments in the poorest countries are sometimes borrowing money, and it's never disclosed how much they're supposed to pay. Then the government leaves, and the people of the country are left with the burden of the debt. That's a cycle, a debt cycle that we have to get out of, because the politicians or the leaders can benefit from the immediate loan, but then it's very hard for the people of the country to repay that.
David, in the news this weekend, Liz Sly's article in the Washington Post on Lebanon was heartbreaking. How can you affect assistance to a Lebanon that's being absolutely crushed right now?
These are tough challenges. Lebanon had taken deposits into its banking system and paid a very high interest rate. Think, you know, I'll test your history, but remember the S&L crisis long ago in the U.S. You had this elevated interest rate that made it look good for depositors, but then when they began to withdraw, it created a banking crisis. What we're doing in Lebanon is trying to support the social safety net. That means actual cash to actual people, individual people, rather than trying to run it through the government and the banking system, which is so problematic now.
David, don't test Tom's history. We'll be here all day. He'll start signing books. David, you know how this works. We'll be here for a long, long time. You know, as well as I do, that everybody wants to receive a grant, nobody wants to receive a loan. When you say there needs to be haircuts, who are you speaking to?
The official bilateral creditors right now, and so that's institutions in the U.S., government institutions that are lending heavily. More than half of it now is China, Chinese institutions that have lent to these countries. What they're doing right now is putting the debt payments at the end of the term. They're pushing it down the line rather than reducing it. So the net present value is being preserved. At some point, you have to reduce the net present value in order to create light at the end of the tunnel for the poorest countries. That's what I've proposed. Also, the commercial creditors, the G20's already asked them to do comparable treatment, meaning they would be reducing the net present value of their loans or of what's owed to them. We're talking about, remember, the poorest countries. Yeah. So given the pandemic, it doesn't make much sense for the wealthier countries and creditors to get back all of their money from the poorest countries and the people in those countries.
We could just as well be talking about Europe, but we're talking about much, much poorer countries, David, of course. And you have a lot of empathy for what they're going through right now, and I can sense that. When you send this message to the Chinese Communist Party, how receptive are they?
Yeah, they're receptive. President Xi has said he wants to fully participate, and he wants all Chinese agencies to fully participate in the suspension initiative. Then that gets into the details of what that means. So that's why what I've tried to do in the G7 meetings last Monday, a week ago, and in the G20 on Saturday, is be very specific about the need for the transparency. I'll give you one example. Central banks have been making deposits into other central banks and not labeling it a loan. So you make I'll just put money in your bank account, but it's really still my money, but it's not a loan to you. That needs to have more transparency on that practice so that others, when they're lending or giving grants to these countries, know what the totality of the debt is. So a lot of the work that we're doing this month and next month, what the World Bank is, what I've had people doing is put on the websites all the information that we have and then invite more information. We can shine a lot of light on this and make progress. The reason it's so important is countries can then invite investment into their countries with the knowledge that it's transparent, that the investor, the new money coming in, knows what it's getting.
David Malpass, fantastic to catch up with you, sir. Incredible insight, and got to get you back on the program soon. David Malpass there, the World Bank president. Tom, I think Lisa nailed it. It is about grants, not loans. And that's the story not just for Europe, but worldwide right now.
It is. It's absolutely interesting how every culture, every philosophy, John, government philosophy, is battling with this idea of giving the money away versus some kind of repayment on the back end. What I don't see enough, to the point of the haircuts that you both brought up, you've just got to wonder where the haircut is going to be on the debt, the cram down to take the debt and extend it out further. We really haven't discussed that yet.
And Lisa, we talk a lot about Europe and the core of Europe and helping the periphery of Europe. China and EM is a massive, massive story now that's been building for the best part of a decade. And I think for the most part, when David Malpass was speaking there about needing haircuts, pushing things back, adjusting things, he was addressing the Chinese Communist Party.
1,000%. People saying that China has extended potentially more than $500 billion of loans to developing worlds. And the question is, A, how much is it? B, what strings are attached? And C, how will it get addressed during this crisis?
Counting you down to the opening bell in New York City this morning, about 1 hour and 50 minutes away from the opening bell. Equity futures down 5 on the S&P. We're off by a little more than 1/10%. On this pandemic, next on this program, Dr. Jonathan Quigg of the Rockefeller Foundation. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With First Word News, I'm Ritika Gupta. The European Union may be on the verge of a deal over that massive stimulus package. The Netherlands, Austria, Denmark and Sweden have been holding up negotiations. Now they appear to be ready to agree that $450 billion of the fund would be made available as grants, with the rest coming as low-interest loans. The emergency stimulus package could be worth about $860 billion. Brexit negotiators are in a tense standoff, and that's dashed hopes of a swift deal. Informal meetings between the European Union and the UK have failed to make progress since last month. The latest round of talks begins today in London. British negotiators say the EU's concessions aren't enough. The EU says its attempts to compromise aren't being reciprocated. One Democratic representative calls Florida's coronavirus outbreak out of control. Donna Shalala told ABC there should be a lockdown of the entire state. Meanwhile, the mayor of Los Angeles said his city is on the brink of new restrictions because of the increase in virus cases. These comments suggest that months of trade-offs between health and the economy are far from over. And President Trump is again questioning Joe Biden's competence. The president told Fox News that if Biden had to sit through a tough interview, quote, he'll be on the ground crying for mummy. He made the remarks as two new polls showed the Democratic candidate continues to lead the race. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Many of those cases are young people that would heal in a day. They have the sniffles, and we put it down as a test. Many of them, don't forget, I guess it's like 99.7%. People are going to get better, and in many cases, they're going to get better very quickly.
The President of the United States on Fox News over the weekend, a 40-minute sit-down in a swamp like Washington. To be clear, that is a reference to the weather and not the politics, Tom Keene. Alongside Tom Keene and Lisa, I'm Jonathan Ferro from New York City with Equity Futures. Just recovering a little bit here, Tom. The reopening process in this country very much in focus for all the wrong reasons, Tom, and that continues to be the story. LA on the brink. The message from the mayor over the weekend. Not a great message to receive, I've got to say.
The language, John, this weekend was just extraordinary. I'm so glad, John, you chose that slot to play with Chris Wallace of Fox News. What we choose to do is to speak to experts. He's out of Harvard, the Strong Memorial Hospital complex at the University of Rochester, with decades and decades of experience. He owns the high ground with his book, The End of Epidemics. Jonathan Quick joins us from the Rockefeller Foundation. Dr. Quick, the sniffles thing, I got to be honest, I went ballistic as someone that touched upon science. How do you respond to a president who looks at this virus as the sniffles?
Well, I mean, it's clearly a virus that is not the sniffles. I mean, we've seen how it spreads, how it creates severe illness. I mean, we have, I mean, one of the distinguishing features of this coronavirus is its ability to crash intensive care units. And the length of stays for people who do need serious care, and that's at least 5–10%, depending on the location, sometimes more. The length of stays are unprecedented. So it's a stealth virus in the sense that perhaps a third of the cases are asymptomatic. So it's a real challenge, but it is a absolute. I mean, it's a nightmare as a viral enemy.
Dr. Quick, the president seems to be grasping at the idea that it does not have a profound effect on the young. Early on in our discussion, we spoke to a radiology expert at Mount Sinai who made clear that wasn't true, that there was damage, if not death, to young people. Can you agree with that 4 and 5 months on?
Oh, yeah, yes, indeed. I mean, it is the case that it's less frequent, but we're seeing a unique inflammatory response in children, in kids that will affect the blood vessels and their health in the brain and in other parts of the body. So yes, indeed, it can cause serious illness at all ages, though indeed much less common at the younger ages.
Dr. Quick, there have been a number of studies showing that children do, in fact, spread the virus, perhaps less so when they're under the age of 11. But nonetheless, they have traditionally been vectors of disease, and this virus is no different. I'm wondering, do you think that we can reopen schools, given the levels of infection that we're seeing throughout the nation right now, as well as the challenges of getting the kids to their schools?
In places, it's difficult to imagine in places where cases continue to rise exponentially, opening schools at this point. And it's the children, it's the teachers, it's the bus drivers, it's the food service workers. It's taking it home to the parents, but then on to the next generation. So each community needs to make, or a locality, a decision based on the risk there and the state of the epidemic there. But I can't really imagine a wholesale nationwide opening.
Yeah, Dr. Quick, Peter Hotez is literally, as we speak, tweeting about this. Of course, the giant in virology from Baylor University as well. What is your prescription then, as Lisa mentions, what is your prescription to go community by community, school district by school district, public school by private school? How do we affect that literally tomorrow?
So doing it tomorrow isn't possible. We don't have guidelines. So one of the things the Rockefeller Foundation has done, last week we launched a Getting to 30 Million and Beyond report on testing. And one of the critical elements of that is protocols. guidelines, risk-based guidelines for schools, for nursing homes, for at-risk workplaces, vulnerable communities, because the states and counties and school districts shouldn't be on their own to figure it out. They need some systematic guidance, and we would love for that guidance to come from the CDC or Health and Human Services, because that sort of concrete guidance is what's needed to get the right testing in the right place to monitor the disease.
Yeah.
I mean, if you don't have that, and the first sign is, a third of the kids out and teachers getting sick, that's too late. You need to be monitoring and doing screening tests, rapid turnaround screening tests. And we're at 5 million tests a week now. We need to be at 30 million tests a week, particularly going into the fall. We will have flu. Distinguishing flu from coronavirus is it's essential in order to keep our schools and workplaces as functional as they can be.
Dr. Quick, Hong Kong went back into lockdown after 100 cases of coronavirus were diagnosed. Back in the U.S., it's almost laughable that 100 cases would cause a lockdown. Which approach is the right one?
Well, you need to have a threshold. So as we begin to open workplaces and schools, you need to have in mind at what point you say this is getting out of control and we're going to close, not permanent. We may close for a few weeks. And so that kind of guidance is what we need to have here. I mean, it's in some ways analogous to the decision about snow emergencies. I mean, you have a threshold and you say, look, at a certain point, it's unworkable and we will close. In the case of coronavirus, that closures needs to be several weeks. But even the question of opening, you need to have some clear guidelines on when you're going to open.
Doctor, fantastic to catch up with you, sir. Dr. Jonathan Quick there of the Rockefeller Foundation. And Lisa, isn't that the problem? Arguably, the higher thresholds in many states across the Sun Belt is what got us into this mess in the first place. It was always going to be about the tolerance level of governors. Unfortunately, for many, the threshold was much, much too high than should have been expected by some of these governors. And still now, we don't have a federal approach to all of this on something as simple as wearing a mask. And I still can't believe that's the case in America right now. If the science authorities, the medical professionals can all agree that we should be wearing a mask, why don't we have a national mandate to do just that? Why can't the governors all get on the same page?
Indeed. And the places to watch right now, Los Angeles, as well as Florida, Miami County in particular, as some of the elected officials say, we are on the brink of spiraling out of control, John.
Certainly that's the message from LA at the moment. Equity futures doing okay. We're down just 0.1% on the S&P 500. Up next on this program, Eric Friedman, U.S. Bank Wealth Management Chief Investment Officer from New York City this morning. Good morning. This is Bloomberg Surveillance.
you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This was that crisis, and that's what we delivered with a 15+% ROE. So I think it validates the strategy, but it's our strategy. It's not for everybody. This is what we chose. We didn't want to be credit heavy. We want to be flow-based, fee-based, asset-based.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Confidence is the elusive issue here, and in an environment where unemployment is going up, and for those that are in work, there will be that fear of the specter of unemployment coming down the tracks.
Folks are just not going to go out, and they're not going to spend at the same levels if they feel insecure about their family's safety and their own health.
A lot of businesses are not buying into the V. They see a different destination regardless of the journey.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Bloomberg Radio, Bloomberg Television Worldwide. It is not a boring Monday in a summer of July. It is news-packed. Interesting things on politics and international relations, and of course, all of it devolving onto the markets. The operative word this morning is stimulus, and John Farrow, it is stimulus in Europe, announcement shortly, and presumed stimulus meetings in Washington.
In Europe, it's about signal, not size, Tom. The right signals coming out of the weekend, they're making progress. They meet again at 4 p.m. local time. That's 10 a.m. Eastern time. In the United States, it's about size. Let's be clear about that. There is a $2 trillion spread between Democrats and Republicans as Congress returns to work down in Washington. $2 trillion, Tom, not small change.
Lisa, what do you see in the bond market? I mean, it devolves out to a $4 trillion. I've even seen word of a $5 trillion deficit. There's the immediacy we just heard from Mohamed El-Arian and from the others as well. I mean, what does the bond market look like into the end of the year?
John nailed it. It's wide open. Basically, it's saying we will give you money at the lowest borrowing costs on record in order to borrow money. And you see that for the U.S. government. You see that also for U.S. corporations. Right now, Tom, get this. The cost for investment-grade companies to borrow in the United States is below 2%. This is the all-in borrowing cost. That is government-type level. And we're talking about a time with rising defaults.
This looks to the shocks of the weekend. The Tots beat Lester, whatever it's called. They just trounced him there.
Do you like how Tom does this? He mispronounces his football name, so he can make out he doesn't know what he's talking about.
Yeah, and
but
John,
you watched more of that game than I did.
Okay, but John, we also saw a reappearance of the real yield on Bloomberg Television. We look for more of that coming up. John, a lot of this, seriously, is the dynamic of the inflation-adjusted yield. Yeah. It's just not there.
Real yield might be back.
Okay, I'm placing a stop on profit for euro at 114.46.2. So 114.46.2 stop on profit. It will give us nice £200 in profit.
Nicely over, John, to our guest this morning. Eric Friedman joins us, U.S. Bank Wealth Management Chief Investment Officer. And Eric, you know, we can go right over on our mystery of the real yield, the mystery of the risk-adjusted rate, into how we're calibrating the equity market given all these stories we're talking about. You go back to something a bit odd, the Gordon dividend discount model. Come on, Eric, does that math work in this tumult?
Tom, we think it does work, and ironically, this is an environment where as that real yield continues to drift lower, the thing that we as asset allocators and asset managers have to think about is what should you own? So if expectations start to consistently head lower, we want to own more stuff. So owning things like diversified interest streams, whether that's from dividend generating companies, whether that's from real estate, those are things that we think we have to own for clients to continue to keep up with a shrinking yield environment.
If we're going to have lower real yields, negative real yields, Eric, is a signal to buy growth equities? If growth and the price of growth is going to be at a premium, isn't that what we have to be positioned for?
Jonathan, I think you do, and part of it is just at what cost, of course, is a consistent question. So what we decided to do last week was actually to rotate a bit away from large cap domestic growth and into more, let's call it mid-cap, small-cap equities. Not a full position rotation out of growth, because we still think that scarce growth value is really important. I think there's really two horizons we have to think about. Horizon one is, what does the recovery look like before the vaccine? And then horizon two is, what does life look like post-vaccine, however long that may be? So we think in either scenario, scarce growth will work. But in a scenario where you have a big run-up in those growth equities, it just can't go on perpetually. That's why we took some off the table, but still think there's a reason to hold on to it for either horizon right now.
Eric, how much conviction do you have going into small caps right now, given the fact that default rates are...
Position closed on euro at 114.462. £200 profit.
Looking at implied default rates, and that is one where I wouldn't say we have massive conviction, but we do think that you have to have some positioning there, some footing there. And if you look at the equity market dynamics, especially right now, one of the key things will be, what leadership resumption do we see? Last week, I know this is very short term, but last Monday, tech really had an outside day where you saw a rotation away, and markets still held up. And if you look at what held up, it were things like auto companies, capital goods, materials, really economically sensitive stuff. So what that tells us is that while the prospective growth rates have probably come down a little bit, that as we get towards that second horizon, a post-vaccine world, there is some value to be found in some of those smaller companies. But to your point, if we do see default rates pick up, if we do see some chop, especially in back to school, which your team did a great job of covering earlier today, that is a case where we could be wrong. But again, we're willing to take that at least on a partial basis and have a little more pro-growth mentality, especially with small and mid-cap companies.
Eric, it's amazing that many people are still reflecting on the price action of last Monday, literally a week ago. This world is moving so quickly, yet still that moment sticks with us. That huge reversal for Tech Monday and the weakness that persisted through the week for big names like Microsoft, Amazon down every single day last week, Monday to Friday. What was the signal you took from that, Eric?
I think the biggest thing, Jonathan, was that the market still hung in there. And I don't say that with a glass half full or just a Pollyannish viewpoint. But if you do look at an environment where, let's say that happened a month and a half or 2 months ago, that would have been probably a down 5-7% type of day, week for broad U.S. equities. But the fact that we were actually flattish with a lot of tech leadership rolling over, that at least is an incremental positive. I think that the next 2 weeks will be really, really important, especially as we get closer to the back-to-school phenomenon, because the state and local response is one that we just have to pay really close attention to. A lot of schools, both domestically as well as abroad, are still playing it somewhat by ear based on how the data looks like. So the fact that we saw really a rotation out of technology, and yet we did see the equity markets hang in there, is at least for us a good sign. But worsening COVID data, we think, could reverse that. So this will be an important next couple of weeks.
Eric, you're bringing me to speechlessness here. You're way, way too optimistic. The vast majority of the interviews we're doing are of caution, measured caution, and outright doom and gloom. What do they get wrong?
I think, Tom, that basically our viewpoint is that over time, and I don't mean to say this, we're talking about weeks now, I'm talking about a longer-term time horizon, that risk premium works, that if you are patient, you will be rewarded for the risk that you take. And we have to keep in mind that there is still a tremendous, quote-unquote, catch-up trade that has not happened yet. And when I say catch-up trade, I mean Europe, small cap, mid cap. Think about some of the really bombed out sectors. Yes, they've had a nice bounce since the March 23rd lows, but we're not even close to where we have been, nor do we actually have the opportunity to see those companies even consolidate. There's some consolidation on the tape this morning. So bottom line is that while we think there is reason for some measured caution, we also have to remember that a lot of this stuff has been discounted already. So that leaves us with more of a glass half full mentality. But of course, we have to be responsive. We have to be mindful of some of these risks that, again, we and others don't have great edges over. I mean, the path towards a vaccine is an important path, but it's one that most of the market will be price takers on as opposed to having great prescience for when it will actually arrive.
Eric, the lack of real yield driving people into risk assets despite some of the bleaker economic data, also driving investors into gold, reaching the highest levels in 6 years, with Citigroup coming out and saying it's only a matter of time before it hits a new record high. Where are you on gold? How consistent can we see gold rally in tandem with risk assets?
Probably the best thing to gauge, Lisa, is the size of the Fed's balance sheet. That, at least in our models, is highly correlated to the underlying price of gold. So we have seen a little bit of a pause in balance sheet expansion. We think that's really more temporary, some of it for more technical reasons as opposed to fundamental reasons. So as you see this continued central bank stimulus, and again, Europe on the tape, and likely will be later this week, with an increased commitment towards increased stimulus, we think that's going to drive the price of gold higher. So we've been waiting for a pullback to get a little more aggressive. It just hasn't happened yet. Perhaps that happens in the miners before it happens in the spot commodity. But we do think the risk is certainly higher as opposed to lower for gold. And the key thing to look at is the total size of central bank balance sheets as a great harbinger of that price.
Eric, great to catch up with you, sir. As always, Eric Friedman there of US Bank Wealth Management. Tom Keene, Lisa Wright to pick up on the story. The complaint about gold for decades was gold has no yield. Guess what? Neither do treasuries on a real basis. They're negative. And that's been the real story, the shift over the last couple of months.
Well, it's been there, but also in currencies as well. It's been amazing to see the differential, even with the dollar resiliency of gold set in dollars, gold set in yen, euro. I mean, Dennis Gardman's been dead on in this. But also, John, a lot of major houses have gotten this call right.
Can I just give you a flavor of the South Side conversation at the moment as well? Lisa, just a little bit over the last week or so on the data, there are some concerns about claims this week into next week. There are some concerns about the payrolls report maybe next month, the month after. Those claims about that second wave layoff story have started to build. We've started to see that materialize. It's not just a call anymore. We're starting to see real signs of it. There's some real concerns starting to build about the data that wasn't there a couple of weeks ago.
Basically, furloughs becoming permanent layoffs increasingly, with companies saying it would be ridiculous for us to operate our businesses the same way that we used to, given the post-pandemic reality, John. Unclear how much this is going to show up, but it showed up in last week's claims. Perhaps just a little bit, but perhaps it's a sign of what's to come.
The improvement started to stall. The conversation just started to shift a little bit coming into an important week for earnings. From New York City this morning, good morning to you all. With equity futures bouncing back, we are negative just 5 points on the S&P 500. Up next, we turn to Europe. Brussels in focus with Carsten Nickel, Teneo Intelligence Deputy Director of Research. From New York City this morning, good morning to you all. For our audience worldwide, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. In New Jersey, a gunman reportedly dressed as a FedEx driver shot and killed the son of a federal judge and wounded her husband. The judge, Esther Salas, was in the house at the time but was not injured. Law enforcement says it doesn't know of any specific threats against her. Last week, Salas was assigned to a lawsuit against Deutsche Bank linked to disgraced financier Jeffrey Epstein. The 4 countries that have been holding up a European Union rescue package are now set to sign off on a key proposal. The Netherlands, Austria, Denmark and Sweden are satisfied with $450 billion of the fund being made available as grants. The result will be in the form of low-interest loans. EU leaders will meet again today to work out remaining issues. The White House and Senate Majority Leader Mitch McConnell begin talks today on a new coronavirus stimulus package. Bloomberg's learned that the administration is balking at $25 billion that Republican lawmakers want for testing and contact tracing. McConnell has been preparing to unveil a Republican-only bill this week before he negotiates with the Dems. And President Trump is playing down a resurgence of coronavirus cases in the U.S. He told Fox News that many people experience nothing more than sniffles. The president called the U.S. response to the outbreak the envy of the world, and he called infectious diseases chief Anthony Fauci alarmist. And Chevron has agreed to buy Noble Energy for about $5 billion in stock. The deal would be valued at about $13 billion when you include Noble's debt. This would be the largest takeover in the oil industry since it was rocked by the coronavirus pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The stakes couldn't be higher. If we do it right, we can overcome this crisis stronger and emerge stronger from the crisis. All the necessary pieces are on the table, and a solution is possible.
Ursula von der Leyen there, the European Commission President, going into a fourth day of talks in Brussels between the EU 27 European leaders meeting once again. From New York City this morning, good morning to you all. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro, counting you down to the opening bell, 1 hour and 12 minutes away. Let's get you some price action as futures recover a little bit as the session grows older. Futures down 4-5 points on the S&P. We're down a little more than 0.1%. In the bond market, yields down by 2 basis points to 0.61%. And in foreign exchange, there's your firmer euro. We give some of that up this morning. Euro dollar 114.41. Just looking at the bond market, Bund yields pretty much unchanged. Italian yields coming in a fair bit, actually, Tom, on a 10-year by 8 basis points or so. It's not a done deal yet, Tom. We've got to really say that over in Brussels right now. Progress, yes. Deal, no, not yet.
Lesson, John. I look at what's going to go on in Washington today, and we'll see the ballet at the White House, and then on the coming days as we have an American process. But this European process, John, has caught me by surprise. You were way out front on how this set of meetings was different.
I think there's some real urgency, and it looks like we got that urgency to generate some kind of step forward over the weekend. We still need to discuss strings attached and not just size of the grants, and that was the discussion over the weekend. Let's have that discussion now, shall we, with Carsten Nickel, Teneo Intelligence Deputy Director of Research. Carsten, great to catch up with you. Just walk me through that. Have we got an agreement on size, and what does the discussion around strings attached sound like going into this evening?
Yeah, it seems that we have made some progress on the size of the actual recovery fund with these 390 billion in grants being proposed there by Charles Michel, the council president. But as you just outlined, I think the question of kind of scrutiny, let's say, for economic reforms on the ground, as well as the question of the rule of law when we're looking at the overall budget for Europe, that is obviously still very much in the open, and I think that's what we should be focusing on in the coming hours.
Dr. Nickel, there have been changes since World War II in how Europe does business, how Europe gets along. Is this one of those changes, or is that asking too much?
I think that's a good way of looking at it, to be honest, because this is politically transformative, what leaders are trying to cobble together here. Let's make no mistake, in terms of the overall size of the money that we're looking at, it probably won't be enough. So we'll be back to this point, in a couple of months, in a year or two from now. But I think the politically transformative moment is this idea of going to the market together as the European Union, showing solidarity and also applying greater scrutiny for economic reforms in those member states that are receiving the funds. So I think we shouldn't underestimate the political importance of what's going on here right now.
That seems to be the argument from market participants as well, Carsten, that it's not about size, it's about signal. And if this isn't enough, we've got a mechanism to come back and do it again. That's the takeaway. Overwhelmingly, that's the consensus. Carsten, do you believe that's the case? Is there any reason to believe that this is just a one-off?
No, I think that is the case because setting precedent in the process of European integration, if you look at it historically, it has always been very important. That, of course, doesn't mean, and I think that's the warning sign, that doesn't mean that the next rounds and the next steps that are still ahead of us will happen without conflict, right? So it doesn't mean that we're getting a deal today that basically sorts everything out going forward. The closer we integrate, the more political conflict will play out on the European stage, and I think we're getting a first taste of that already in these negotiations right now.
I love the concept, Tom, politically transformative, another way of saying, is it a Hamiltonian moment? And the question of the Frugal Four and how they really feel toward the southern states. Have there been any material concessions on the part of their attitude toward some of the southern states, I'm talking about Italy and Spain, that are transformative in these negotiations, Carsten?
I think what is transformative here is the fact that even from Sebastian Kurz, the Chancellor of Austria, Mark Rutte, the Prime Minister of the Netherlands, nobody has ever questioned the very idea of a recovery fund. That, to me, is the main movement. We're fighting over, 500 billion in grants, 390 billion in grants. We're fighting over the exact level of scrutiny and the governance mechanism to ensure that. That's all good. That's all fine. But the very idea that in this exceptional situation, the north of Europe, that depends so heavily on the single market, has to show solidarity with the South, that has never really been questioned. And I think that, to me, is the main change here.
But, Carsten, this is important. Is Brussels changed by this, or is it another ballet till the next meeting?
I think the most important thing that's changing is member state politics, domestic politics in the member states. And we've seen that over the last 5 to 10 years everywhere across Europe. We're usually focused on the bad news, the rise of populism and so on and so forth. But you've also seen, if you look at France, for instance, the emergence of a staunchly pro-European leader like Macron, the change of heart that we've seen from Angela Merkel in Germany on the last meters of her chancellorship. that is encouraging news. And so to me, the most important thing is what's happening in the party systems of the most important member states. And there, indeed, things have been happening.
Carsten, I hear you. The debate is about the size of this. It's not about the concept. And just by the very nature of the conversation right now, that is progress for the Europeans. On a final question, though, about this evening, this has to be ratified at home. For Prime Minister Rutte, how hard is he going to be this evening when it comes to strings attached to the grants they'll hand out?
Yeah, I think that will be the key thing, of course, because he needs to be able to go home to the Netherlands and remember that we're going into an election year there, March 2021, and he's under massive pressure, of course, from the populist far right at home. So he needs to be able to go home and say, we're not just putting money on the table, but we're actually gaining influence in the direction of better and more sustainable economic policies in the South. And if he can say that, then I think that's the pathway to a deal.
Carsten Nickel there, Teneo Intelligence Deputy Director of Research. Tom, if we can keep the bond board up and just take a look at Italy, and I think that really just spells out quite clearly what this is really all about. Not just European integration, but helping Italy. And overwhelmingly, that is where you see the positive response in this market.
Yeah, those are yields lower. And just in the last 10 minutes, John, you begin to see yields lower. The German 10-year gives way, that negative yield becoming ever more negative. And in the U.S., the 2-year yield breaches a 0.14 right now. So there's a bid to bonds and a new lower yield across the board.
I just don't believe this evening, Lisa, is going to be fun and games in Brussels, around 390 billion euros of grants. Prime Minister Rutte needs to get a deal that he can go home with and get ratified. And to do that, he's going to be really, really hard when it comes to strings attached.
It's really correct to focus on those strings, especially at a time when the irony is that Italy, which is being supported arguably the most by this program, is actually less supportive if you take a look at the polls of the European Union. So the strings attached will be key in guiding that popular support or not.
And looking at Italy right now, your 10-year yield 1.087% on a 10-year in Italy, which might sound really, really low, but when you look at the spread against, say, Germany, a German 10-year right now, negative 0.456%, sitting just in and around the negative deposit rate over at the ECB. That just gives you a little bit of an idea of how wide that spread still is. Italy versus the core of Europe. Coming up on this program, we'll talk about the core of this labour market, the weakness, with Jason Furman, former Council of Economic Advisors Chair. He'll be catching up with us next on Bloomberg Radio and TV. This is Bloomberg Surveillance.
Greatest fear is if we continue with a system that allows pharmaceutical companies all the monopoly control over the medical solutions to this pandemic, that we're going to see a situation of a bidding war, essentially, between rich countries.
I can't block the U.S. from doing deals. Of course, I would imagine many allies would be quite unhappy at the time if they're dying, their populations are infected, and that's not being shared. So what we can do is create legal agreements with companies and try to move forward. If at the end of the day, those legal agreements are broken or countries seize assets or don't allow provision of vaccines, that's a problem.
have to find a solution because some of these arrangements have been made. And I think we have to be pragmatic about it. I think we also have to stick to our guns.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Inflation goal is symmetric, which means we should overshoot it. We're having a difficult time doing that, like all developed economies. I'm supportive of the idea of letting inflation get above 2% before we take any action with respect to the Fed funds rate.
Minutes away from the opening bell this Monday morning in New York City. Good morning to you all. This is Bloomberg Surveillance. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, getting you in shape for the opening bell. Just around the corner, equity futures coming back a little bit, still negative on the day, down 6 points on the S&P 500, down around about 0.2%. The story last week, really, tech underperformance and a benchmark S&P 500 that still held up and grinded a little bit higher. We'll hear from the big tech names going into month end, starting with Microsoft in just a couple of days' time. In a bond market, yields in a couple of basis points to 0.61%, and a euro slightly firmer. Euro dollar 114.47, up 0.2% there. Just a massive week, Tom, for transatlantic fiscal talks in Washington, D.C. and in Brussels later this evening.
Well, stimulus there everywhere, and of course all of it is about magnitude, John. One of the things we can do is look at these changes that we're in and take them across a span of generations. Jason Furman is the former chairman of the President's Council of Economic Advisors. He's one of our great voices on policy. And far more importantly, he has taken over the challenges that Martin Feldstein and Greg Mankiw had in Harvard in EC 10. We're thrilled that Dr. Furman could join us this morning. There's never been an EC 10, whether you do it virtual or in class, Jason, this fall, that has the magnitude of the changes we're seeing. How will we come out of these magnitude of changes, the magnitude of fiscal policy, the magnitude of monetary intrusion into our system?
Well, first of all, we'll come out a lot better if we have a big magnitude than if we don't have a big magnitude. All the evidence of the last experience we had was going early, going big. You don't regret that. You never regret that. I think a second thing, Tom, is we have to admit we're just uncertain. We don't know the path this virus is going to take. We don't know, what the pace of the recovery is going to be. It's very different in different states, and you need to build that uncertainty into your policy, have it adjust automatically based on economic conditions.
We have a labor economics, Dr. Furman, that has moved from furlough to, I think, layoff to now outright firings. Give us the tone you see in the American labor economy in the coming months. Will there be a wave of terminations?
Yeah, I think there's two downturns. One is the temporary layoff downturn. That's like a natural disaster, and that's been getting better quickly. There's a second downturn, though, which is people who have been fired, people whose businesses have gone bankrupt. That downturn is getting worse a little bit every month. The fact that we're still seeing 2 million people claiming unemployment insurance, including the pandemic unemployment insurance, every week, months after the shutdown, is very worrying about that second recession, which is sort of a normal recession and one that won't solve itself very quickly.
Jason, given the fact that we do not seem to be having the virus fully under control in the United States, given the fact that we've seen record numbers of cases over the past few weeks, how concerned are you about also an accelerating wave of bankruptcies? Because some people are suggesting perhaps we've seen the peak when it comes to defaults.
I'm worried about, I mean, look, first of all, ultimately bankruptcies are one of the functional things in the American economic system. We're better at bankruptcies than other countries. We're better at having companies operate within it. That being said, if a lot of companies go bankrupt at once, if they don't have the financing to get through the bankruptcy and continue operating, that's what I'm really worried about. And so want this, you know, for some companies, maybe the airlines should go through bankruptcy. That might be the right way to handle their situation, but it would need to be done in an orderly and managed way. And yes, I think there's a lot more of them ahead of us.
Jason, can you link the extension of the $600 of enhanced unemployment benefits with the corporate health of America? This idea that corporate profitability has been bolstered by those enhanced unemployment benefits. How much could that be threatened if there isn't an extension?
A lot. You know, this is an amazing downturn where there's a huge hit to the U.S. economy, but consumer spending is right back where it was 12 months ago. Why is that? That's because disposable personal income is right back where it was, if not a little bit higher than it was 12 months ago. Why has income not fallen? Because of those unemployment insurance benefits. So this is a recession completely unlike the last one where you saw a huge decline in consumer spending. Here, we've had the V-shaped recovery in consumer spending. It's been supported by the unemployment benefits. If they went away right now, it would be a big blow to the economy.
Jason, what's so interesting here is if it's a natural disaster, and if we can be optimistic that there will be a cure, there will be a better America, there'll be a better health, etc., what portion of this slowdown is strictly exogenous and drifts away, or is any of it endogenous and we really have to worry about an effect, a permanent effect on the American economy?
I'm worried that that natural disaster covers part of what we're seeing, but then you get the additional induced sort of normal recession that causes. And, you know, I have in my head a model where we get back about half of what we lost or two-thirds of what we lost relatively quickly, and then the rest of it is a slog that takes years to recover.
So, you know, just 6 digits. I don't want to pin you down here, but how much stimulus do we need in the next couple of weeks? We've got an operative number of $1 trillion, maybe $1.5 trillion. We see a deficit out to $4 trillion. I mean, are those good numbers to you, or are we lowballing the need?
You know, if you did a well-designed piece of legislation, I think about 1.5 trillion would be sufficient. If you throw in a bunch of nonsense, which is likely to happen in Congress, then you probably need, you know,
see,
2
John,
trillion.
You see how the professor from Harvard denigrates our politicians, calling it a bunch of nonsense? That doesn't happen in the United Kingdom.
Well, he's not in government anymore, so he doesn't have to be as diplomatic, does he? Isn't that the cheat guide to all this? Once you leave, Tom, you can say whatever you like. Jason, it's great to have you with us. Carry on.
Just to be clear, by the way, I think the bulk of what's going to be in there is going to be good. I just think they'll layer in some other stuff.
Don't worry, Jason, if we quote you, we'll put that on the end, we promise. Just to wrap things up, Jason, the experience of the last 10 years, the nature of that particular crisis was so different to the nature of this one. Are there any lessons learned from a very shallow recovery in the previous 10 years for the recovery we're about to endure, the one in front of us now?
There were some things we could have done. State and local governments continued to cut back. It took about half a point off growth. Need to make sure they continue to be supported. Last time the stimulus ended prematurely. Need to continue it as long as it's needed. But you know, I think there may be some sort of speed limit to how quickly people can reconnect to jobs, even if you have a lot of demand. And so, you know, we just need to be prepared for you know, a lengthy recovery process, but do our best to speed it.
One final question. You know the work of Jared Bernstein and others assisting Vice President Biden. Has Vice President Biden called upon you for analysis of his new economic policy? I'm
certainly in touch with people in the Biden camp, and you think they have a lot of good ideas.
You didn't tell them it was a bunch of nonsense.
Like everything, there are things I like, parts I don't like.
Jason, we'll let you go. It's always great to catch up with you. Jason Furman there of the Harvard Kennedy School. Tom, is this a new habit of yours, that every single day you're going to try and work out who would be in a potential Biden administration before we even get anywhere near November?
We're working on it. Dr. Furman and I have done a lot of things, particularly with the Council on Foreign Relations. And what's so important here, John, is his analysis is so trenchant that even those on the Republican persuasion, they have to read Furman to understand the center ground. There's not enough talk, John, in this country about finding the center ground of Democrats and Republicans.
Well, Tom, let's be clear here. When it came to size, and you asked Jason about the size of the potential stimulus package, it wasn't the $3 trillion that House Democrats have been pushing for. It was something just north of what Republicans are looking for.
Well, this is really important, folks, and this is, not all our guests, but some of our guests are very policy-driven on both sides of the aisle. I think, on the same aisle is Dr. Furman. Rick Mishkin up at Columbia would be much equivalent.
What this all underlines, of course, Lisa, is the need for help consistently through year end. And that's something I don't think many people considered maybe 3-4 months ago when we were looking down the barrel of all of this. We talked so many times on this program about a bridge to the other side. We mentioned several weeks ago that bridge might need an extension. We just haven't got to the other side yet. We haven't got there, and we're going to need more assistance.
Well, my question is how much of the aid that we're talking about was necessary, was inevitable, and how much is required because of a virus policy that isn't working that well to contain the pandemic, John?
Oh, they're connected. Absolutely. They are totally, totally connected. If you had a cleaner, tidier, slower reopening process, you might have needed to do a whole lot less. But I don't want to get away from the idea you would have had to do more. You would definitely have had to do more. And I think where there is reluctance right now is that we have to accept that there are people unemployed that can't be employed because their industries are totally constrained by the restrictions around this pandemic. I can think of the airlines as one. I can think of the restaurant business as another. Secretary Mnuchin, Tom, is talking about targeted help for various industries. And I think travel and leisure and the restaurant industry, front and center. You can't tell people that they can't go back to work because their businesses can't normalize and then not help them.
This is really, really important because those are the obvious industries. And I think Dr. Furman, John, alluded to there's a lot of less obvious industries out there that show, if not recessive characteristics, just a sluggishness out there that may need aid.
Quite clearly also, Lisa, there are two camps right now on the enhanced unemployment benefits. The one camp wants to just extend them as they are. There is another camp that wants to end them, and I wonder if we end up with something in between, where we taper them off slowly. I understand the general argument going forward that there might be a disincentive for people to return to work, but as I say, and I'll say it again, if your industry is constrained and it cannot normalize because of restrictions, then you're telling people they can't go back to work even if they wanted to go back to work. So that has nothing to do with incentives. And I don't think we should be in a position in Washington at the end of this month going into August, basically telling people, if you have a job, you can have a payroll tax cut, but if you don't have a job, we're going to take away your enhanced unemployment benefits. That is not a good message to send to anybody at this point.
Just because there aren't official shutdowns doesn't mean the economy isn't slowing and jobs aren't returning because of the pandemic. This is a distinction we are going to see again and again as the virus spread continues to slow the economy, John.
Coming up on this program, we'll turn to big tech, which has really taken advantage of the shutdown over the last several months. Coming up next, a bull on some of the biggest names in America and worldwide. It's Dan Ives, Wedbush Securities senior analyst from New York City. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. The European Union may be on the verge of a deal over that massive stimulus package. The Netherlands, Austria, Denmark and Sweden have been holding up negotiations. Now they appear to be ready to agree that $450 billion of the fund would be available as grants, with the rest coming as low-interest loans. The emergency stimulus package could be worth about $860 billion. Brexit negotiators are in a tense standoff, and that's dashed hopes of a swift deal. Informal meetings between the European Union and the UK have failed to make progress since last month. The latest round of talks begin today in London. British negotiators say the EU's concessions aren't enough. The EU says its attempts to compromise aren't being reciprocated. One Democratic representative calls Florida's coronavirus outbreak out of control. Donna Shalala told ABC there should be a lockdown of the entire state. Meanwhile, the mayor of Los Angeles said his city is on the brink of new restrictions because of the increase in virus cases. These comments suggest that months of trade-offs between health and the economy are far from over. President Trump is again questioning Joe Biden's competence. The president told Fox News that if Biden had to sit through a tough interview, quote, he'll be on the ground crying for mummy. He made the remarks as two new polls showed the Democratic candidate continues to lead the race. And Bloomberg's learned that Norwegian online marketplace Adventina is near an agreement to buy eBay's classified advertising unit. The price, about $9 billion in cash and stock. The deal will give eBay a significant minority stake in the combined company. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. So you can keep on.
That the latest number on grants seems to be 390 billion, down from 500. That's still enough for the market to see this as a significant package, if not a panacea for the troubles. Once we get some agreement on that, hopefully it comes today, then we move on to some other thorny issues around governance, around conditionality,
David Stubbs, the JP Morgan Private Bank there. Conditionality, very much the focus this evening. 4 p.m. local time in Brussels, European leaders meeting. That's 10 a.m. Eastern time. As we look ahead, Tom Keene, euro dollar rolling over just a little bit here.
Yes.
Almost unchanged on the session. Looking forward to catching up with Mohamed Al-Arian of Allianz and, of course, of Bloomberg Opinion at the top of the hour on Bloomberg TV, Tom. This is not a done deal. And I think the market's just positioning for that this evening.
8:48 Wall Street time, 10 a.m. Wall Street time. Maybe we'll start to get some news flow out of Europe, and clearly yields a little bit nervous. We have a lower, more negative German set of yields as well. Still teensy weens, but nevertheless, there it is. It has not been a teensy weens move for, say, Amazon. 11% off the tippy-top peak where Lisa Abramowitz bought 2 shares, but there it is. Amazon back. We need a tech update desperately from Daniel Ives. He's with Wedbush Securities, and as you know, folks, has been quite optimistic. You know, it's buy the dip, Dan. That's all there is to it. Where do you buy a dip? How do you judge that as a fundamental analyst?
Yeah, it's a great question. And I fundamentally view that these stocks, in terms of FANG and tech, there's still a 20% plus move higher over the next 6 to 9 months. It looks at the secular growth stories. And right now, if you look at cloud, e-commerce, and some other areas of tech, you're really seeing a lot of these growth stories accelerated by 12, 18 months. And in my opinion, the re-rating for tech is still in the middle innings.
So, Dan, let's go exactly there to cloud computing. Is that the main driver of some of the gains to come that you're expecting? And, of course, this comes ahead of IBM reporting earnings after the bell, Microsoft Wednesday, and then the week after with Google and Amazon and the rest.
I think right now, the poster child for cloud continues to be Nadella and Microsoft. And that's why I think that's a stock ultimately it's going to be $2 trillion as we go into next year. You look what's happening in terms of growth. Only 30% of workloads are in the cloud today. That's going to 55% next 2 years, getting accelerated because of the COVID pandemic. You look at Microsoft, the AWS piece for Amazon. You look at GCP for Google. These are keys to some of the re-ratings on valuations of big tech, and it speaks to a broader theme. There's a lack of secular growth stories out there, and that's why, in my opinion, tech, the path's still much higher, you know, even despite some of these speed bumps, and of course, the haters will continue to hate the rally.
Dan, some people saying that Amazon's growth leaves it on a path to be bigger than the entire global retail sector combined. Question, is this a retail company or is this a cloud computing company, given where its profits are coming from?
I mean, from a profits, it's obviously cloud. You know, of course, e-commerce and cloud, that's the 1-2 punch. And that's why what's made them so unique, and obviously will be a focus next week when they're in front of Congress. But I think if you look at the next leg of the story, and I think part of the re-rating, it's not just e-commerce, it is cloud in terms of on the AWS side. We believe $1 trillion is going to be spent in cloud over the next decade. And that's why you're seeing not just Microsoft AWS, but the whole work from home space and a lot, even cybersecurity names that continue to see all-time highs here.
Dan, I look at Apple, but I know they've each got their own story. Are these companies underowned or overowned by institutions?
I think institutionally speaking, it's still a bit underowned.
Unbelievable.
I think many have been skeptical of the rally. And I think when I look at Apple, I think that is the next leg. Because when you go into iPhone 12, what I still think is a super cycle, an extended one, I ultimately think from a re-rating perspective, that's something where bull case we're at 525 on Apple. And I think institutionally, you're starting to start seeing more buy-in as you get through some of these quarters.
Let's stop here. This is really important, Dan Ives. Explain to our audience the pressure to own a given style, blue chip company, et cetera, like Apple, whatever, the pressure to own it if you're an institution. How does that work on June 30, September 30, or 12/31?
Yeah, I mean, a lot, especially with so much weighting on the index, you underperform. And if you make the bet going against some of these names, which has been the wrong bet, ultimately as a fund manager, you're trying to figure out what font you're using on your resume. So I think that's been the issue here, is that the path continues to be higher. Even though the valuations are in a new stratosphere, it comes down to this is really a new age for technology, and that's why you're seeing the strong get stronger in terms of the FANG names.
Strong gets stronger and a lot bigger. At what point does regulatory risk return?
And I think that's the drum roll into next week when you have appearing in front of Congress with Cook, Bezos, and the others. And I do think that drum roll starts to increase going into the fall. Right now, Street's viewing it as background noise, but a lot of that's also going to be the political makeup. If you have a Biden presidency and a Democratic-controlled Senate, that starts to become more of a risk. Right now, a background risk because of fines, but I think next week we'll get a better sense in terms of how sharp teeth are in terms of pressing this issue.
And Dan, we've heard about regulatory risk for a long time, and it hasn't come to the fore in any real policy, certainly not in the United States. Which company do you think is most susceptible to actual regulatory risk in the next year?
Well, I think right now it is Amazon and Google. I mean, those are the ones front and center. You know, of course, Apple bid on the App Store, but especially also what's happening in terms of the EU, because it's on both sides of the pond in terms of the threats. And I think that's also why preemptively you're going to see these CEOs get in front of Congress, because I think they will be spending a lot of time physically as well as virtually in the 202 area code over the next 3 to 6 months.
Dan Ives, thank you so much. With Wedbush Securities here on technology and, of course, this historic moment that we're in. Lisa, we wait for the EU announcement. I see these headlines out a bit ago. I just lost them on the screen. But the Spanish Prime Minister, again, speaking the word for the moment, which is compromise, is in order.
Yeah, well, that's what everyone's trying to get to, is some compromise. And it seems like the discussion around 390 billion euros of assistance is being well read in markets, although coming off that a bit. I just find it so ironic, Tom. The more unified the European Union gets, the less people in Italy approve of it, the less that some of the southern states approve of this unity, which speaks to this idea, what strings are going to be attached to these grants?
I totally agree, and this is sort of where I started the morning with Francine Lacroix, was the ability to be in Brussels and play to your hometown audience. And we'll see the same thing today in Washington, as well as the GOP greets the president at the White House. They're talking to each other, but I guess they're also talking to their constituencies at home, aren't they?
Yeah, I mean, that's a great point, the idea that Mark Rutte has to go home to the Netherlands and say, hey, we are going to make them be responsible with this money, Tom.
It's a fragile coalition, to say the least. You know, the more Lisa talks, the more the market goes up. That's a surveillance trend, folks. Futures up 5, Dow futures up 42, green on the screen to greet the next hour here as well. I really want to note the VIX in a new place from 2 and 3 weeks ago. The volatility index 26.03. That is decidedly different than where we were, say, a month ago. It is an eventful day. Please stay with us on Bloomberg Radio and Bloomberg Television. This is Bloomberg.
I'm in downtown Mexico City, where there's quite a lot more movement than before because the downtown is beginning to reopen. Some businesses are still shut down and others are open, so they're alternating days of the week in which they can open. There are a lot of people wearing masks, almost everyone is. The city also tried implementing a rule that would limit the flow of people to downtown. Mexicans are being very cautious.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
None of us are safe until all of us are safe. We need to have a global approach into handling and fighting COVID-19, a global pandemic. Part of this, of course, finding an effective vaccine.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City, for our viewers worldwide, good morning, good morning. The countdown to the open starts right now. With equity futures just turning positive, we begin with a big issue. A small breakthrough in Europe following negotiations through the night. The Frugal Four signalling they're ready to accept 390 billion euros of grants. Chancellor Merkel sounding optimistic, saying, quote, after lengthy talks last night, we worked out a framework for a possible agreement. It's progress and gives hope that perhaps today an agreement will. Prime Minister Mark Rutte echoing that sentiment, saying, quote, I believe progress has been made. We are willing to make the shift from loans to subsidies if reforms are taking place and if these reforms can be enforced. EU leaders gathering again 1 hour from now in Brussels. Joining us from Brussels, Bloomberg's Maria Tadeo. Maria, 60 minutes to go. I know you're waiting for Prime Minister Mark Rutte to leave his hotel. How key are these talks later this evening?
Well, John, I mean, it's been already 4 very difficult days, but we feel like the tone really has shifted this morning. And if you're hearing from Angela Merkel, Emmanuel Macron, all of them saying we feel we have a framework for a compromise, even the Dutch that have been playing this very, very hard ball during the weekend are saying they like the direction that this is taking. I would point, however, when you look at the overall size of the package, those 500 billion euros will be cut in that compromise. You're looking at less than 100 billion euros compared to what was presented at the start of the negotiations. Is now 390 could be that landing zone for this compromise. The question at this point is whether this is going to be good enough for markets, whether when you look at the details and when you look at the numbers with more attention and closer inspection, you feel like this is just ambitious enough, good enough for the European periphery and for a country like Italy to be able to make good on those promises, to reform their economy, to prop start recovery in a country that has been battered by the coronavirus, and also keep those BTP yields anchored. So we are moving in the right direction, but the details here would be key. Tomorrow morning, the market could have a very different perspective on this if we do feel like it's been too watered down at this stage.
Maria, just looking at the FX market, euro dollar just turning around a little bit here at 114.23. We should be clear, we still don't have a deal. If we've agreed something on size, let's say it's 390 billion euros of grants, there is still a huge, huge disagreement over the strings attached. Can you just lay out the groundwork, so to speak, for later on this afternoon in Europe? What people want to see from the Netherlands and what people expect to see down in Italy?
Look, exactly. You make a very great point. The fact that we have 390 billion euros, potentially that is the price tag of a compromise, doesn't mean that we're going to see this deal tonight, and it doesn't mean that it's not going to come with strings attached. The Dutch are pushing for a veto right if they feel the money's not being well spent, and they're also saying they want to get something that they're calling an emergency break on the payments from the European Commission to a country like Italy. The question at that point is this good enough for Giuseppe Conte, the Italian Prime Minister? He can't take anything that looks too much like a troika. He's been clear on that. So we could be in a situation where this deal is watered down enough for the Dutch to say it's okay, but the Italians cannot take it. So I would say just be very cautious. This has been a very difficult negotiation. We're moving there, but we're not there yet. And both Rome and the Dutch are going to agree on this. The strings attached are equally problematic to the numbers. The overall fund and the strings attached, both are key.
Maria Tadeo down in Brussels. Maria, stay close, won't you? Those talks start in around about 57 minutes' time. We're expecting to hear from the Dutch Prime Minister Mark Rutte very shortly as he exits his hotel. In the FX market, as I mentioned, the euro just starting to turn a little bit negative going into this. We still don't have a deal. We've agreed on the size. Now we need to talk about the strings attached. Bloomberg's Mohammed Al-Arian and, of course, of Allianz wrote the following on Twitter just moments ago. Weekend of intense EU policy discussions in Brussels. While they failed to agree, there were more signs of support of eventual agreement, a watered-down package that nevertheless will constitute a milestone. Mohammed, I'm pleased to say, joins us now. Mohammed, walk us through this milestone. How big is it for the continent, for Europe?
So undoubtedly, John, and thank you for having me, undoubtedly it's going to be smaller in size, and there's going to be conditionality attached, as Maria pointed out. But what's critical here is that there will be agreement on a compromise, and every side will be able to go back home and declare victory. And that puts a foundation in place if you need to do more. That's why it's a milestone. It is a step forward on fiscal integration, and it's a very important step forward to support the monetary union that is key to this ever closer.
So, Mohammed, I've heard this several times over the last several days, that this is a mechanism that, if agreed upon, we can return to and do more with. Mohammed, is it that, or is it a one-off? Because either outcome has huge repercussions for financial markets. If it's the former, great. We really have to revalue Europe and erode redenomination risk in a way that we haven't done for the last several years. If it is just a one-off, then I'm not sure we've got anything good here, Mohammed. All we have is a very late response to the pandemic and the economic pain that we experience on the continent right now, and we're not going to return to this in the future. Which one is it, and how can you be sure?
So yeah, you're absolutely right. It really does matter. I believe it is the former. This is not a one-off. This is the start of an important process. That is how Europe gets to better positions. The market, John, if you look at the Italy-Germany spread, that is back to March levels. We are now back to around 150 basis points. So the market also believes that between this fiscal agreement and the ECB, we are getting to a place where you worry less about the really bad outcomes.
You don't get rid of redenomination risk, but you certainly erode redenomination risk. Mohammed, with that in mind, if we can make some progress later this evening, and let me be clear, it is still really contentious over in Brussels about the strings that would have to be attached to any money just handed out. But if we can make some real progress overnight, what do you think needs to be revalued, reevaluated on the continent in financial markets?
I think it's the euro versus U.S. And as you know, for a very long time, I've been saying wait on fading the U.S. in favor of Europe. Given what's happening in the U.S., given what's happening in Europe, I think it's harder to argue against fading some of your U.S. exposure in favor of more European exposure.
Mohammed, away from the currency, if you look at the Italian bond market, European peripheral banks, any of them attractive to you at the moment from your perspective?
Look, they've been so distorted by central bank action, and same for other elements of the bond market, that I'm not quite sure what you're getting unless you have to be in those bond markets. So no, John, at these levels, I think you just respect what central banks have done, and you stay mostly on the sideline unless you have no choice.
So, Mohammed, there's a key distinction here. Believing in revaluing Europe just in terms of the multiple that you would put on a single euro of earnings, and believing that we can generate a sustainable, durable recovery on the continent. If you have confidence about one, do you have confidence about the other?
No, and that's really important. So we think of a whole element of risks, and you have to address each. And it's not just limited to the two you cited. There's other risks as well. There's liquidity risk. There's all sorts of other risks. No, I think there is still a question mark as to what is Europe's engine of growth. Europe will not be able to rely on the global economy. The global economy is as desynchronized as I've ever seen it. The U.S. is stumbling towards a recovery. So there is no clear engine of growth going on. So the areas that depend on global growth need to find another engine of growth. And it's not clear that Europe has found one. And that's why when the Dutch are pushing for structural reform, it's not about punishing countries like Italy. It is about trying to find more endogenous growth engines.
Mohammed, there's a key debate. There's three of them for financial markets and equities. It is growth versus value, it is small versus large, and it is US versus international. And on the latter one, the last one, the third one, I want to address it with you right now. You've been very skeptical about that and pushed back over the last year, not just through this pandemic, about the international part of this market outperforming the United States. Where do you come back down on that debate at the moment, Mohammed, and how has your thinking evolved?
So more positive about Europe, but still concerned about EM. So I can see an argument for fading the US in favor of Europe. I do not see the argument for favoring the US in favor of emerging economies. That's going to take a lot more time. I think people underestimate how difficult the outlook is for most emerging economies right now.
Mohammed, fantastic to catch up this really important moment worldwide for fiscal authorities on either side of the Atlantic. Mohammed Al-Erin there of Bloomberg Opinion and of Allianz as well. In your equity market, we do turn positive very briefly going into the opening bell. Up next on the program, we take the conversation away from Brussels and towards Washington, D.C. Congress returning to work with a $2 trillion spread between Democrats and Republicans. Up next, Terry Haynes of Pangaea Policy from New
I'm placing a new order to sell short Japanese yen at 107.144. So new order to sell short Japanese yen and 107.144.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.